Good afternoon, everybody. Welcome to this week. It's Sunday. We're here again. We got news. We also got free memberships because this is that first Sunday of the month, and I like to give away usually around 10 every Sunday. And we've started. We have already started. Before I hit that go live button, I dropped the first one, and look at this, Glenna won. Congratulations, Glenna. Now, those of you, if you look at this little thing here, if you look under it, if there's another box and it's got a little link and it's talking about enabling memberships or enabling gifts, you got to click on it and say, yes, please. I would like to get free memberships, because if you don't have that enabled on your account, doesn't matter how many free memberships I give away, it won't go to you. So you want to make sure that's turned on. So that's kind of a huge thing. And we will be dropping throughout the show. We'll be dropping, like I said, probably about 10. Usually it's 10. Sometimes I go over. It just depends on the day. But this is going to be fantastic. We're going to have a good day today. I got so many housekeeping things we'll start with. Tomorrow, you guys do have that opportunity. If you want to live stream tomorrow, so a market close, a bonus one, I just heard a siren. Don't know what that was all about. I guess the police want the market closed tomorrow. But for supers, anytime through the show, and we will have a extra bonus one on Monday. I'm also going to give you an opportunity on Wednesday if you guys want to do Friday. So, get the full cap going this week. So that's a possibility for you guys as well. All right. Quick little word about Blossom. So Blossom, of course, is that social media app that is designed for, investors. So all of the big financial YouTubers are there in Canada, and we're starting to see a bunch come in from the US as well. So it is a fantastic place to be, basically just talking about, investing, getting ideas, seeing what people are doing. I'm over there. If you want to come check it out, there's a link down below in the extra info. Definitely click on that. Come on over, give me a follow. I'll follow you back because I want to see what you guys are posting, and I'll throw in my 2 cents as usual. All right. The other little piece of housekeeping is we're getting close to 4,000 subs. And that means we're going to be doing a open to close. So it's going to be like what's that? Like almost an 8-hour stream. So holy banana bread, it's going to be long. It will be happening on a Friday because I had a request. For a Friday because one of our favorites has Fridays off. So they're like, please have it on a Friday. So yeah, I have agreed to that. So it will be on a Friday. Right now we're at, I don't know what we're at. Let's take a gander. We'll see how close we are. So right now we're sitting at 3,968. So we're 32 away. So it is going to happen in July. The big question is going to be, which Friday in July is it going to happen on? So that will be fun. I need to start filming a few things for that. So I need to film my break videos because obviously I'm not going to sit here and depends. I'm going to, I'll play a video for you guys if I have to go take a bio break. So it'll be fun. It's going to be a lot of fun. I can't wait. Then we'll look forward to 5,000 after that. Okay, let's get to the, whoops, what did I do there? I absolutely messed everything up. Look at me clicking the wrong buttons. It must be Sunday. All right, let's get back to chat. See what's going on in chat here because you guys have been busy as beavers. We got Jonathan in first. Am I early? Yes, absolutely. Marco's in the house with a, hey, everyone, hope this week is a good one for the markets. Let's go. Maybe. Anyone bullish on Canadian telecoms? So let's see. G-Marks grab some BCE and Rogers. So I think rate cuts are going to do a lot of good because a lot of the telecoms, they're carrying a lot of debt. And because they're carrying a lot of debt, they're servicing them at higher rates. As these rates come down, it will help them. No doubt there at all. Mugsy's in the house. Great day for a live stream. And Mugsy is bullish on TELUS. Yeah, there we go. I hooked my horse up to Bell, but I think TELUS, I think all three are probably good investments. Though when I look at them, I do pay one thing I do look at is the fact that Rogers has more debt than the other two. So that might be a reason to maybe pick Bell or TELUS over Rogers, but you never know. You never know. Prairie's in the house. Good afternoon, everyone, and happy Sunday. And a congrats to Glenna. And apparently, according to Jonathan, it's Glenna's birthday. So happy birthday, Glenna. It's probably not your birthday, but we have a 1 in 366 chance that we could have that it could be your birthday. So we'll stick it that way. Bismarcky's in the house. Good Sunday, all. And we got a quick old hi from Meow. Whoops. Stan says, happy Sunday, all. And Vic is dividendstrategy.ca, where he speaks about Beat the TSX portfolio, BTSX. I'll have to check that out, Vic. I'll have to check that out. Ian says, hello, everyone. If you do the 1% match with Wealthsimple, read the fine print. I can't pull more than 5% of my total portfolio for 1 year now without losing my bonus. That's where they get you. They always get you in the fine print. It's like, who actually reads the terms and conditions? Most people don't. Most people don't, unfortunately. So they could put pretty much anything in there, and you're kind of agreeing to it when you just sort of zip through it without reading it. Jay says, hi, everyone. All right, let's see. Vic says, basically take the top 10 dividend payers from the TSX 60 and in equal amounts into each. Okay. There's Glenna. I know Glenna is one of our normal lurker folk. So we got a few. We got a lot of people who lurk that are here. They don't talk a lot, but they're awesome. They're just as awesome as everybody else. Marco says, for Canadian stocks, I just pick my own as a dividend portfolio. Everything else is index ETFs. Yeah, and there's absolutely nothing wrong with index ETFs or even being an ETF investor. That is a perfectly good way to go. And you can get a very, very well diversified portfolio going that way. Plus, you're making the fund managers do all the work for you. So it's almost like having staff, if you think about it. Ian says, I have this Friday off. Oh, this Friday. Well, people had better start piling in and subbing pretty quickly if we want this Friday. But that would be, it could happen. It could happen. The video coming out on Tuesday, we're actually looking at split core stocks. So they do tend to, the split core do tend to do fairly well. So we'll have to see. Okay, so it's every other. All right, so if it's not this Friday, hopefully then it is, what is the next one? Is it the 25th? So we'll have to look at that. Marco says, I want to be a fire soon so I can have every Friday off. That's not too shabby. And we have a bonjour from Al. Hello, good to see you. Prairie says, I have every Friday off till the end of August. Looking forward to the day-long live stream. Yeah, absolutely. So I know Prairie will have no problem getting into it. It'll be fun. It'll be interesting too. I imagine I'll have little peaks in viewership when people's lunch times come in. It's like, let's just see what Candace is doing on that long stream. So that'll be kind of neat. And Al says, I've been FIRE for a while. So FIRE, by the way, is financially independent. So it's a good movement. So financially independent, retire early is what the full acronym means. So not too shabby. Oh, we got good vibes in the house with a bonjour. And we have Jeff tuning in from Austria. Away for work, fighting jet lag. Oh, jet lag is the worst. The furthest I've flown, time zone wise, has been like Halifax, Vancouver type thing. So that's about a 4-hour time zone. But yeah, if you get into a situation where it's like a really long time zone, oh God. Let's see. Kevin says, I finally caught a stream at the beginning. Awesome. Good to have you. Good to have you as always. Muggsy saying, smash those likes buttons. Yeah, absolutely. Hit the like button. I'll have a sip of coffee. Well, you guys all hit that like button. Very, very good. I'm pretty sure I tasted some blue there. So I know a few of you hit the like button. So I'm happy. Vic says Biden has jet lag. Well, yeah. He's got a leg of some sort. Enid says, hello, everyone. Good afternoon. Hello, Enid. Good to see you. Well, with the arrival of Enid, we gots to do it. Let's drop a membership here. All right, here we go. Bang, bang. Here comes our second free membership of the day. Who's going to get it? I don't know. It might be Vic. I'm just taking a wild guess. I don't know. And it's Ian. Ian has won a membership. Congratulations, Ian. Always fun to see. I always love it. Like when I recognize the name, because I see the name a lot, I always feel great. I'm like, all right, this is fantastic. So nothing too shabby about that. And Alice saying hello to Enid. Jeff says, I'm taking melatonin. I'm not sure what Biden's taking for his leg. I don't know, but I think he has half the military out looking for the fountain of youth. It might be his only hope. But we'll have to see. Jackie says, hi, everyone. And we got a congratulations for Ian. And like, go, Ian, it's your birthday. It looks like a lot. So both Ian and Glenna are having a birthday today. So fantastic. We'll have to get some emotes out for cake and balloons and party things, all of that fun stuff. So that's not too shabby. All right. Now, in addition to what you guys got going and everything else, we do have news. We do have the news. So we will start pulling some of that out pretty darn quick. But first, Slick Pete slid in pretty fast here with a please do a video on EQB stock if possible. Thanks for all the great YouTube videos. Okay. I have done videos on EQ in the past, but they're definitely due again. So one thing I just want to point out, guys, over on the Discord, there is a section where you can actually request deep dives. So like you could request EQB. I'll throw that in the pool. I will add this because I will remember, because I wouldn't mind doing EQ again soon. But yeah, you can do that. If you're one of the folks who they're like, Candace, I don't like the Discord, but I do follow over on the Facebook groups. Throw it over there as well. I can take it from there and I can just move it over to the pool that I keep over on the Discord. So it's all good. We'll get the ones that you guys want done. That's pretty important. All right. We got Jordan in the house. Hello, Jordan. Heidi there, Candace. Hope all is well today. Absolutely. And here's Jonathan. EQB is a fave. So yeah, it's definitely a big one. I think a lot of people like EQ Bank. All right. Let's actually do a news story. How does that sound? All right. So our first story of the week is unemployment. So we had the jobs data for both Canada and the US. Jobs data came out on a Friday. So analysts had been expecting the unemployment rate to come in they were expecting 6.20%. And it came in hotter than that. It came in at 6.4. So unemployment ticked up a little bit faster than anticipated. Now, in total, and right now we're still talking Canada. I'll let you guys know when we switch to the US. In total, the economy up here lost 1,400 jobs in June. And when you break that down, we lost 3,400 full-time jobs and gained 1,900 part-time jobs. So yeah, definitely a lot of jobs gone. And I guess one of the problems with that is as we keep running out of jobs and this unemployment rate goes up, it is going to make it pretty difficult for, well, who are looking for summer jobs? Students. So students may have a rough time finding something this year. So that's not too great, not too great. That's for sure. All right. So the unemployment rate, as I mentioned, it has increased, and so has the proportion of long-term unemployed, with 17.6% of those unemployed in June having been continuously jobless for 27 weeks or more. So that number is definitely getting higher, and it is up 4 percentage points from a year earlier. So we weren't looking quite as bad last year, but this year we are looking, it's looking bad. Now, this does bode well for, of course, rate cuts. So this is one of the things that the Bank of Canada is looking at, and they want to see it get bad. It's kind of morbid that they're sitting there going, it needs to get bad so we can cut rates. But this here will definitely help us get some future rate cuts. Some people are getting on board for July having a second one. I'm still kind of thinking a pause in July, but we'll definitely have to see how that bodes. Excuse me. Now in the U.S., so the U.S. economy, they added 206,000 jobs in June. Now that is down from May. Back in May, they added 272,000 jobs. Now they were expecting around 200,000, so they did come in a little bit more jobs than expected. So that is definitely still staying strong. But with unemployment, their rate rose. It was 4.0% in May. It moved up to 4.1%. So the Fed will like that part. They will like that. I mean, they kind of already expect the economy to be strong at this point. But with unemployment ticking up a little bit, that will certainly help the argument for a rate cut in the U.S. before the end of the year. So we'll definitely have to look and see how that is all going to turn out. All right. Whew. And Enid says, hi, Al and everyone. Abalash says, EQB fell from 150 to 80 in October 2023. Oh, wow. That is a big drop. Absolutely. I really hope the EQ Bank, I hope we can get that. I'll get that I'm actually putting up a vote probably after the show is done, because I need to script it probably Tuesday. So we'll get that in so you guys can do some voting on the next deep dive. Let's see. EQB will be bigger when they start opening business bank accounts. Yeah, that would absolutely be a big plus for them, because right now that's not a consideration. But yeah, I would agree. I would agree 100%. And Jeff says, would love a deep dive into CCO, so Cameco. All right. So once again, guys, throw it over on the Discord. I try to remember what I see in like live streams, but honestly, sometimes I may not get every single one. But if you throw it into the Discord for me, we're good. That way we're going to get, it'll get put into the dive. Because the way it works, and just for people who are new to the channel that maybe don't understand, we have a pool. So the pool is basically all the companies that you guys have requested. And we pull them out and we have a vote. So every deep dive, we have 5 potential companies, and then you guys vote on which one gets the deep dive. And that's how we determine. So it's not like, so when somebody comes and says to me, Candace, can you do a deep dive on this company? I'm like, I can put it in the pool. And then if it gets voted, I'll do the deep dive. And sometimes there are some companies like, I really wanted to do a deep dive on PDIV, the ETF, but they could not win for the likes. They kept coming in second over and over and over again. But I set it up this way, and I firmly believe in it. And I love giving you guys that opportunity and that voice. So I'm not going to just sort of pile one in and say, I'm going to do this one anyway. I don't care if it didn't win. I like to stick by that. I'm pretty good with that. All right. Prairie says, I'm 50-50 on a July rate cut. I'm like I said, I'm hoping they don't, but I do understand there's a chance. I really, really, really would like to see that not happen until September, just to give a little bit more time to make sure that inflation doesn't sort of wobble back up a little bit more after the last one, because it does take time for things to filter in. But if they do it, they do it. That's fine. I mean, we'll have to sort of see. I don't think the market has it priced in yet, but we still have, and I think this is going to be the big determining point. We still have one more CPI to come out before the Bank of Canada makes their decision. So if everything starts moving back down again, because our last CPI was a little hot. So if it's still a little hot, the next one, then I would say there's a 0% chance at that point. But if it goes back down, then there's probably a chance. I don't know if I'd go 50-50. I would go maybe 60-40. So 60 for there not being a cut, but we'll see. We will have to see, of course. Abalash says, let's see, do you see a recession coming? There are a lot of recession news coming up in the feeds and Google News in the past 2 to 3 weeks. Yeah, people do worry about a recession. And here's the interesting thing. Do I see an official recession coming? I don't. Not soon anyway. But unofficially, we've been in a recession. We've been experiencing recession-like conditions. And if you, instead of using just the GDP, if you look at our GDP per capita, that really looks like recession numbers. So I would say we've been in an unofficial recession, with the bear market moving into it. We're kind of, are we coming out of it? It's hard to say. It'll be interesting to see how these rate cuts are going to really impact the economy, to see if that gets us out of it. But I think the big thing is the governments don't want to call an official recession. And technically, right now, we're not in an, you can't even say we're in a technical recession based on how they measure recessions. And that's an argument that we could say, are they using the right things? Like, should they be using GDP, or maybe should they be using GDP per capita? Because, in a sense, the reason that Canada did not go into a technical recession is because, well, the government, they basically opened up the doors to immigration and they really brought a lot of people in. And that, of course, brings in a lot more money. That pumps and inflates our GDP so that we stay above the positive. So we say, in the positive, above the negative, sorry. And that kind of works that way. And that's kind of the situation that we've run into. So I think, and especially, I also looking at it this way, like the current government that we have, we're going to have an election next fall. So not this fall, but the following fall. And I don't think there's any chance they'll call a recession. They'll do whatever it takes, even if it is just to inflate numbers to keep us out of a technical recession. I think they'll do whatever it takes to prevent that from happening. Because for some reason, Mr. Trudeau, I believe he thinks, he's one of these people, like, he does, and I'll give him credit for this. He does tend to do, much better when he's got his back against the wall. And that's kind of where I think he's at. And he's good at campaigning. He's good at elections. And he's hoping that's going to turn things around. And unfortunately, it's not. And I think we all know that. And I think now the Liberal Party, there's a lot of dissension starting to pop up even within the Liberal Party saying, okay, it's time. In a way, it's like we're kind of mirroring the U.S. in that sense. Because, in the U.S., you've got the Democrat parties. There's people starting to sort of say, it's time, Mr. Biden, perhaps find something different to do than running a country and carrying around a nuclear football and all of that fun stuff. So, well, it's going to be interesting. I think it's just neat that we have kind of a parallel here because we have the same thing. Although in this case, Trudeau is certainly not senile. But he is a little bit, he's got a little bit of an ego. And I think that's been part of the issue with him and perhaps could be part of the issue why he'll resist, a change in leadership with the Liberal Party. All right. Enid says, hope they don't, so hope they won't cut in July. Yeah, I'm hoping that too. And Enid believes that we are in a recession as well. Jungle Eddie says, I am moving from stocks to ETFs, except my huge block of RY. Okay, that makes sense. That makes sense. It's interesting. I've been hearing a lot of people sort of looking at things and saying, you know what? Why am I even investing in stocks? Maybe I should be going into ETFs. And there's nothing wrong with that. Like ETFs are a very valid valid thing to look at. Now, I did have a question. I had a suggestion for a video. Actually, Tanya. This came from Tanya. She was looking like, okay, so you got like a whole bunch of different ETFs, for example, that all, they all cover the S&P 500. So which one should you go with? Should you just go with whichever one is the cheapest? How can you differentiate them? And which one should you go with, basically? So here's the thing. When you have, let's say, for example, let's just say we have three. Well, just to keep it easy, there's a few things I'm going to look at. First of all, I'm going to look at how they're performing, because here's the thing. Each management team of these ETFs means that they're going to select the weighting of the stocks differently. So, for example, one stock, one ETF may be, maybe heavier on financials, while another one may be heavier on energy, just as an example. So that's can be a difference. And that's one of those things. So what I like to do is I like to, first of all, look at their performance, look at the type of total returns I'm getting, because I can pretty much guarantee you're not going to get the exact same total return. And a lot of times, if you have a consistency, so that's one of the reasons I like to do different time frames. So if you have a consistency where ETF A has had the best total return on the year to date, on the 1 year, on the 3 year, you can even go back to the 5 year if you want, then that's probably meaning that management team is really, really good at what they're doing, and they're really picking a good mix of that S&P 500 for what they're offering. And that could be a good thing. Now, in addition to that, you also want to look like if everything comes out fairly equal, what could be your deciding factors? You might want to look at your management fees. So if one's offering the fund for a 0.2% management fee, but the other one's asking for a full 1%, that could be a factor that you might want to look at as well when you're looking at, when you're just sort of deciding which one you're more interested in. There's all kinds of other variables as well that you can take into consideration. And by going to, for example, the pages of the actual ETF. So if you go to their page and you can actually pull up their portfolio, you can look at it. Some of them will even give you all the ESG stuff. So the environmental, and I was looking at one the other day, it would actually tell you, I loved it. It basically had every dangerous thing in the world, and it told you how much that ETF was invested into each one. Like it had nuclear weapons, tobacco, all kinds of just different things. And I was just like, that's kind of neat, because, some people, because I know at one point, just to put it out here, somebody had put in a company for the deep dive, and it turned out that they made ammunition for war. And I actually had somebody quite angry that it even made it into the vote. And they were like, no, we can't, as Canadians, we shouldn't even vote on that. Now it lost horribly, and I removed it. I didn't give it its full 3-week cycle. But yeah, I mean, sometimes that can be an important factor as well. All right. G-Mark says, I just have some small positions in stocks I like and the rest in ETFs. Yeah, there's nothing wrong with that. Vic says, honestly, most of us in this space should index ETF. I just look at QQQ and VOO for returns. There we go. So now VOO is, that's Vanguard's kind of their flagship S&P 500. It's a great one actually to put into your RRSP, because then you get everything and you're not getting that 15% withholding tax. Vic says, having said that, I do dabble on stocks, but really I have never consistently beat the index. Yeah, and it's difficult. Like if you look at a management team, that's what they're designed to do. That they're there. They're like they give you the benchmarks because that's kind of a good thing. So if you have, for example, an ETF that tracks the S&P TSX, so that's actually the TSX, you can take and see what kind of returns you're getting. Then look at what returns the actual TSX is returning. So that'll give you a general idea as to are they beating that benchmark. Now, you also need to keep in mind, though, when you're looking at that kind of data, so if you actually just take the returns on the TSX, that's not giving you a total return because it doesn't count any of the dividends that are coming into these companies. It's only counting like the overall value of the company. So technically, you're making a little bit more, and the TSX is, unless you're buying 100% growth stocks, it is going to return more than what you see when it comes to it. So just that's something to keep in mind when you're looking at your benchmark. So if you just beat the TSX, then you're probably not beating the TSX if the dividends were factored in from whatever, from the entire portfolio and put that into perspective as well. All right. Let's see. G Mark says, right on, Vic. Chad. And to power all those data centers. Ooh, yes. Abalash says, how often does HMAX and cover call ETFs usually rebalance? It depends. A lot of times, if you go to their website, it will tell you how often. There are some that balance quarterly, and there's others I've seen that balance twice a year. So you have to sort of go and look in through their material, but it usually will tell you. 9 says, glad I didn't buy AQN. Yeah, AQN was on definitely a rough ride down. Now, I think they will do better in the future, but still, if you got off before it all happened, then I applaud you. I applaud you for sure. Let's see. URA ETF, another gooder. Okay, what? I don't even know what I'm not sure what URA is. I'll have to look. We'll have to look at that a little bit later once we get through the news. G Marks, what's up with NAV erosion and covered call ETFs? They seem to go steadily down. It depends on the ETF, but a lot of times that does happen. So you take a covered call, one that has a higher dividend. A lot of times what happens is if they don't have enough money, they start doing return of capital. So that is basically them returning some of your capital. And when they're doing that, if you think about it, what's happening to their market cap? If they're returning capital, that's, everything is being pulled down by that. So sometimes you will get that NAV erosion in there. And it's kind of one of those things you have to sort of look at as you're putting together your strategy. Now, normally the really high dividend ETFs, like if you're going to put it into, for example, a retirement portfolio that's an income portfolio, you may not be super concerned about it. You may be, as long as you're still getting all of your dividends, because that's what you've got it as a functionality for. But there are some that do a little bit better, and that's kind of those things that like, for example, when I look for my high dividend ETFs, I will look at their returns. For me, I would rather have one that has no NAV erosion. One that's actually, even if it's just, let's say, for example, over the last 3 years, they returned 1%, but they're giving a huge dividend. I'm like, that's fantastic because I'm not getting NAV erosion, but I am still getting that income. So, I do look at a whole bunch of different factors and sort of put it into perspective. I also look at, if you look at some dividends, so a good one, for example, is BTCY. So BTCY, that's the purpose Bitcoin yield. There's absolutely erosion in that one, and you can easily see it. But it's not that you're losing money. When you look at all of the dividends, you are still getting your investment back. It's just that you're not making as much as you think you're making. So when you look at the bigger dividend picture, so when you look at where they opened BTCY back at the beginning of basically, well, it wasn't the beginning of the pandemic, but it was right around the time Bitcoin was hitting all-time highs back in, what was that, November of 2021. And then it went way down. And now that it's come back up and Bitcoin has hit new all-time highs, even then BTCY never fully recovered that value. It's that value is just gone forever. And that's kind of a normal thing with them. So sometimes you have to sort of put that into your consideration, and you have to look at what exactly you're using that income portfolio for. If you're just using it to grow your portfolio, you're better off with total return stocks, because you can get bigger percentages than what you're getting in dividends. You may not be getting it all in dividends, but you're, and getting a lot of it in growth, but that's still growing that portfolio. All right. Vic says, Zedjewel by BMO. I can't even understand this beast. Zedjewel. I've never even heard of this one. Look at this. We got a whole bunch of interesting ones here. Yeah. And Michael saying, have you noticed that great American food companies making new lows like Cage, HRL, and KHC, and many more? I've noticed it. I haven't dug into it. And I know we talked about this last week, and I was hoping to get a chance to dig into that. I did not get a chance, though, unfortunately. But I know I had marked actually a YouTube video to watch because somebody was going on about it. So I'll have to do that this week, Michael, so that I can get back to you on that. 9 says QQCC does well for a CC ETF share price wise. Yeah, exactly. And there are some that are going to do absolutely fantastic. It depends on what they're doing and what that underlying asset is. So it'll be interesting. So, you've got QQCC, and then, of course, if you're a little more risky, you've got QQCL as well. But so far, it's done really well. But keep in mind, and this is the rub. There's always that limit, that upper limit of how well you can do. So as tech exploded, QQCC exploded in its own way, but not as much of a magnitude as tech, because the upper limits get capped off. That's part of what happens with covered calls. So you still have done really, really well, and plus you've gotten all these fantastic dividends. So you're still doing really well. And if you were reinvesting those dividends back into QQCC, you're pretty darn close to doing what the market did. So that's not too shabby. Abalash says, I get in on AQN when it was at $18, but DCA down to 11. Yeah. I mean, AQN used to be, it used to just be a fantastic little dividend stock at one point. I used to love it. I used to have a whole bunch, but things, and it kind of hit, it's kind of interesting. Like, it's not just AQN, the utilities right across the board. They all got all got hit hard when the rates started going up as fast as they did. AQN was one of these companies as well that they had a lot of grandiose plans, and they've had to sell off some of their assets and things just to try to get that debt back under control, because they were in the process of expanding and doing a lot of good things if the rates were going to stay low for a long time, as kind of everyone said. AQN probably would have been in a different scenario today than they are. Jungle says, let's see, HYLD has done well with NAV over the last year or two. Yeah, exactly. And HYLD, it's interesting. So they came out with a dividend of 14 cents per share when they came out. But then, of course, we went into a bear market. So they went down, and they eventually had to even lower that dividend. And they did. They took it from 14 to 12 cents per share. But what I like about HYLD is that as the bear market ended and as the S&P started recovering and they started going up with it, they then boosted their dividend back up. So right now, they've had, I think, 2 hikes. Right now, you're making actually a little more than 14. I think it's 14 and a half cents, somewhere in that vicinity now. So that's not too shabby. All right. Whoops. Prairie says, my portfolio has been hit hard by Northwest Health. Oh, yes. Yeah. And that's the thing. A lot of these REITs, they got double whammied. Not only did they have to deal with the bear market, then the bear market turned into raising rates fast environment. And well, REITs tend to carry a lot of debt. And all of the servicing on that debt started going a little haywire on them. So, yeah, they all got hit pretty hard, including Northwest Health. But the good news is, with rate cuts coming, that's going to make things a little bit better for Northwest Health, RioCan, and that ETF I've been looking at that we've talked about a few times, RMAX. So yeah, I think it's going to be better for REITs, but have some patience. We need to start seeing the core of the rate cuts. We won't be seeing those until 2025. So I think in Canada, we're probably going to see a total of 3. We've got 1 so far in 2024, but the rest I think will all be 2025. All right. Sammer's late, but here. Not too bad. 9 says, I'm thinking to add QQCL if the NASDAQ crashes or corrects. Yeah, that'd be an ideal time. That would definitely be an ideal time. And one of the things I like, so when I was talking a little bit about Hamilton, for example. So I mentioned RMAX. So a lot of times Hamilton has started these ETFs when things have been near all-time highs. So HYLD, they were, the S&P 500 was doing really well, and then they went into a bear market. So of course it plummeted with it. This is one of these opportunities with RMAX where they're actually started the ETF when we're near all-time lows. Well, not all-time, but we're near the lows in this cycle and where recovery is ahead. So it's an opportunity to actually watch one that grows opposed to one that goes down first and then comes back up. So definitely could be interesting. Vic says, I met an engineer from AQN, said that they are so over leveraged and keep wanting to acquire other utilities. Plus they dilute shareholders all the time. Yeah, there's a lot of issues going on with AQN. And they do have to step back, and they have stepped back quite a bit, but you have to sort of hope and pray that they get the message and they get themselves back on track. Now, they do hold a lot of the utilities they hold are in regulated scenarios. So that is good, and that will sort of keep a certain amount of stability. But boy, they're gonna keep suffering if they don't get it under control. But the rate cuts will definitely help. 9 says, is there an easy way to tell if a covered call ETF uses a good ROC? Sometimes it's hard. You can go and you can sort of dig through a lot of their material and see if you can get a breakdown on their dividend, because some will give you a breakdown, so you can actually look and see how much of it is ROC. But yeah, it's one of those things where it's not the easiest thing to always sort of spot right away and say, okay, is this good ROC? Is this not? I mean, I look at this when it comes to return of capital. For that very reason, I put a lot of the higher dividend stocks in my TFSA opposed to a non-registered account, because once you have ROC, you got that adjusted cost base falling all over the place. Now, I'll give you a good example. Somebody who does use ROC, and I think they use it in a good way, is Canoe. So Canoe EIT uses return of capital. So a lot of the dividends, that 10 cents every month, some of it is your own capital coming back. And you'll notice with Canoe, every so often that adjusted cost base will go down a little bit in your portfolio. And that's because they've been returning some of your own capital. And that's why, as much as I love Canoe, I always say, don't hold it outside of a registered account. It's designed for that registered account completely. So yeah, it's one of those things. Enid says, I'm wondering if I should sell CU, Canadian Utilities, at a loss. Even with the dividends, the stock is going nowhere. I would agree with Chad about keeping CU. So Canadian Utilities, they're one of Canada's 2 dividend kings. So them and Fortis. The hell? Somebody's ringing a bell and the market's not even closing or opening. So I don't know. I don't even know if you guys can hear that bell. I was just like, what's going on? Is somebody walking up and down the street outside with a bell? But yeah, what I'm thinking about with Canadian Utilities is they're a utility company. They do have they do carry a good amount of debt. That is going to certainly, with rate cuts, that's going to come down. It is going to help them. Their dividend, of course, will keep increasing because they're not going to, they will do anything they can to not lose that dividend king title. So I think both, and I think Fortis is in the same boat. Like, Fortis should be ahead right now, but it's, it's kind of it's been treading water for a little bit. But that's just because of all of the servicing to their debt. And you also have to keep in mind a lot of the utility companies as well have the reason they're taking on more debt is because the world is changing. So they're getting, they're looking at investing in more renewable energy sources, things like that in different projects. That's one of the things that has been certainly helping them take on more debt. And, and then of course the rate hikes all came in and that was like, dear God, why? So it's not the best situation, but I wouldn't sell CU at a loss because they will definitely come back. Let's see, why sell at a loss? There we go. All right, Enid says, in the red since I bought it, hopefully opportunity cost loss. Why sell at a loss? World will need power, it will recover. So there you go. And I do actually think it will recover. All right. Holy cow, you guys are just slamming in the questions here. Sammer, ask yourself, Enid, why did you buy it? If it doesn't make more sense and you don't mind to get losses, so sell it, otherwise keep it. Yeah, and then Chad saying, yeah, 6% dividends. That's not too shabby. Michael says, then all the retail stocks like restaurants like PZZA, Yum, Den, Yumsy, and many more hitting new lows, which wonder when you can invest in any of those. Now, a lot of it, too, is a lot of the food. So when you're looking at least restaurant-wise, as the economy, and as people are, hear the recession word being whispered, and there's a lot of people that are basically saying, I'm not going to spend, I'm not going to go out and do my fast food, or I'm not going to go to a fancy restaurant. Although I wouldn't call Denny's a fancy restaurant under any definition of the word. But they're not spending. People are holding on to that money. And in some cases, now it's not as bad in the US, but in Canada, well, I guess it is kind of bad in the US too, other than the fact that people who have rents and mortgages in the US, they don't have to renew them yet. So they don't have that added burden. But on their credit cards, they're having a lot more interest payments because of the higher rate environment. Same idea in Canada. So there are a lot of people are spending more money. Now in Canada, especially those who've already renewed their mortgage, they're like, holy cow, I can barely afford to buy food at the grocery store. And a lot of people are even turning to like food banks, things like that to try to get food. So that's, it's not working out well for a lot of people. All right. And Chad is always buying pizza, as in pizza. There we go. All right. Marco says, tax question. I'm maxed in TFSA RRSP now and investing in a taxable account. Do discount brokerages adjust the ACB on ETFs automatically? That seems like a nightmare to track over many years. They do. They sometimes they lag at it a little bit. And here's what you can do is if you sort of write down or jot down what your ACB is, and then sort of just watch it over time, you will see these little jumps where that falls down a little bit on these ones that are doing it. I know with Canoe, I definitely see that happening. So it is kind of an interesting thing. Al says it sounds like wind chimes. Yeah. Well, at least you guys could hear it. I'm just, yeah. It almost sounded like somebody just ringing a bell walking down the street. I mean, because it was just weird. Let's see. Prairie says, same here. My PZA or PZA. Chad says, need diamond hands. More rate cuts. CU will recover. Hate selling at a loss. Would love to get BNS, TELUS, and BCE Canadian Tire out of my portfolio, but not going to sell at a loss. All right, fair enough, fair enough. Marco says, what I owe in foreign dividends and the adjusted cost base for capital gain tax calculations. All right. I'm not 100% sure what you're asking here. So, but yeah, it's interesting too, because sometimes if you look at an ETF, for example, if that ETF has Canadian stocks in it, has American stocks in it, then all of a sudden, when it comes tax time and your broker starts giving you your T slips, you'll find that it's actually broken down, because one stock that may have, let's say, for example, you're getting a 10% dividend from it. Well, actually, you know what? It's a great idea. Not a great idea, but a good one is like RMAX. Since we're talking with that, they have 50% American REITs, 50% Canadian REITs. Actually, that's a bad one. That's a bad one because REITs are 100% taxable, so that doesn't work. But if you were holding something that had, let's just say, we'll say you have an ETF that holds two stocks. It holds, let's say Microsoft and I was going to say Shopify, but they don't have any dividend. But we'll just say they're holding a Canadian stock and American stock, and both of them have a dividend. All right. So what happens to that dividend you're getting from that ETF is part of that dividend would be eligible Canadian. So, a partial part of your dividend is actually going to fall under that with the same tax benefits of being eligible Canadian. The other half is, well, it's an American dividend. It's not that you're going to get hit with a withholding tax. That would have happened to the management company before they even calculated things, but that half would be considered a foreign dividend and you would not get any of the benefits. So it would be ineligible. So you wouldn't get any benefits on that. It would be completely taxable for that reason. So sometimes with an ETF, it's not clear cut. You have to sort of look at the breakdown because you could have a few different scenarios within that. And then if there's return of capital, that's considered something completely different as well. So there's a whole bunch of different things that happens with one. Here it comes again. Holy cow. I don't know. I don't know if it's somebody selling ice cream walking with a bell, but the bell is tolling. The bell is tolling. Bismarcky says, someone in my neighborhood rings a bell. He sharpens knives and lawnmower blades. Okay. Interesting. Second to CNR. That bell is driving me wonkers. I'm like, go away, bell. Go away. Vineet says, hey, all. Hello, Vineet. Good to see you. Starbucks. Let's go. Ooh, that makes me think of coffee. Here we go. Let's do it. Oh, that's fantastic. All right. Before we go any further, I haven't given away a membership in a bit. Let's drop one. Let's drop one here. Oh, that is not the memberships. This is over here. All right. Just give me a second here as it processes. All right. This will be number 3, I think. There we go. Like I said, I normally give away about 10 on that first Sunday. Let's see who wins. Prairie Investor. Congratulations. You have won a Mountain of Finance membership for a month. So awesome. All right. Chat says, I'm a CP guy, own CNR too, but CP the better performance so far. Now CP, so Canadian Pacific Kansas City, their new name, they are the only railroad right now that has lines that go from Canada, the US into Mexico. CNR almost does that. So CNR makes it as far as the Gulf Coast, but they don't make it into Mexico. And but what's sort of the advantage CNR has is they have all the northern railroads, so up into our resources, which is fantastic too. So that's one of the reasons I sort of say, like, I think they're both fantastic. I think they're both really good buys. CP, where they're smaller, you'll see bigger gains as they sort of slowly catch up towards CNR, but I never count CNR out. They are a great total return stock, in my opinion. Paul says GPIX does a CC plus has growth. Are there any other CC funds you suggest to look at? Well, I mean, there's so many right now, Paul. One, I keep talking about RMAX. RMAX is one, and I just want to point out I'm in no way affiliated with RMAX. I've just been excited because I'm excited about REITs. So they're one that I've been a little bit excited about. There were, I think, oh gosh, I know there's another one, and I can't remember the ticker off the top of my head. I know that there was a one for another new tech one that just came out too that was looking kind of exciting. But that's what I look at. I look at, and I'll also look at companies. So, for example, Horizon. So Horizon, I guess Global X. I do like theirs. I also like Hamilton. So a lot of times, and this is one of the things I can say, head over to one of their websites because that's how sometimes you'll find out. You'll go over to, like, for example, Hamilton, and you'll see what might be on the might be coming out. There might be a new one that you're looking at and you're like, ooh, this one is right up my alley. So I always say that's not too shabby by going that route. A 9. Whoa, sorry. 9 says grocery store is even expensive now. I don't eat out anymore. Yeah, exactly. Loblaw stock doing well. Yeah, Loblaws keeps on making record profits this year. They're definitely doing good. That's for sure. All right. Al says I bought 2 7-inch subs at Jersey Mike's a week ago. The total was $27 USD for 7 inchers. Holy banana bread. That's a lot. That is a lot. What's with the 10-year on cu.to? I'm not sure what you're asking, Ian. Are you looking at like the growth on it, or yeah, let me know. Clarify what you're asking there. Prairie says, I have CP on my watch list waiting for it to reach my entry price. CNR is close to my heart as my late brother worked for CNR. Interesting you say that. So in my family, so I had 3 uncles that worked for CNR. And I think my grandfather's father worked for CNR. I mean, yeah, there's been a lot of people working at CNR in my family. So, but that's not the reason I like it. I've always liked the performance that it's had. And it's one of these ones that I actually call it recession proof. Sure, it'll go down sometimes, but it always bounces back, and it is part of the supply chain. So I'm pretty darn bullish on it. And I don't think that's ever going to change. Fast food is so much nowadays. Holy cow. You are right. Let's see. Subway 2 to 12-inch 22 cold cut trio. Wow. Use the app, get points, all that fun stuff. Ian, look up up 190%. Let's see. Well, I was expecting 2 12-inch subs to be around $22. I was kind of shocked it was 27 for only 7. Yeah, that's crazy how much things are starting to cost out there. And I'm afraid because sometimes Joe will order something and I have no idea how much it costs. And I kind of am glad that I don't know, because I'll be like, I'll probably have a heart attack if I hear some of these prices. Chad says, yeah, no doubt. I'm cheap as they come. Oh, there we go. So I can buy more stocks. Ice cream. Ooh, there we go. Oh, was it an ice cream truck with the bell? Huh? It could have been. You know what's funny? We have an ice cream truck that does come through this neighborhood at night, like 10 o'clock at nights, and it got the bells going and it's dark outside. And I'm like, what the heck? It's like, if I was a parent, I would not let my kids run out to an ice cream truck in the dark. It's like they're trying to lure kids in. I wouldn't trust it. I wouldn't trust it at all. MVAS says, appreciated our one-on-one. For initial short term is 50% RMAX, 10% HHL, 10% BK, 5% BTCY, 10% XCG, and 10% ENCL, and 10% EIT. Beneficial for cuts. Whew, that's a big question. Use distributions to DCA, to VFB, and EQCL. Thanks. All right. So, as you know, I am liking the RMAX. I do think there's going to be some big growth there. 50% though, that's a little high. That's a little high putting that much into that one basket. So I would say I would recommend maybe pulling back a little bit on that. So you'll notice with some of these other ones, you got 10% and 10% and and 5%. I like the 5%. I would pull RMAX back a little bit. Now it's funny. I do think it is going to go up. I'm feeling very bullish on it, but what if I'm wrong? I always want to put that in there too. Like, I don't think I'm wrong, but I could still be wrong. So I don't know if I would go 50% into RMAX. Now, if you really wanted to, like if that was your only play in real estate, I could justify maybe 20%, but and that's because I have this rule with my portfolio in that I don't like to give any one sector more than 20% power. So just something to sort of keep in mind. HHL, BK, BTCY, they're all really good. I like the ENCL, that will do well. So that's ENCC, but with that little bit of extra leverage on it. The EIT, once again, that's one as well. Like, a lot of people don't realize that Canoe is kind of like an unofficial ETF because they actually invest in a bunch of other companies. Same idea with BAM, so Brookfield Asset Management as well. But yeah, so the big thing I would say out of that, Ambas, is I wouldn't put 50% into RMAX. I think that's a little bit too much to be going all. So it's almost like going all in a way. Let's see here. Yay, it's my birthday. There we go. No, I think you're joking, but hey, maybe go Prairie. It's your birthday. It's your birthday. Congrats. Oh, is it really your birthday, Prairie? Because that would be really funny. Happy birthday. Thank you. Oh, it is your birthday. Oh, well, that's really cool then. Holy banana bread. CPCNR, great defensive stock, no competition. That bell was Uncle Benny driving Dickie D ice cream. It could have been. I used to have a friend who actually did the Dickie D thing every year. That was fun. You don't see those in Nova Scotia, by the way, but they're definitely here in Ontario. Marco says, "What's up with the takeout places asking for tips?" I know tipping culture is out of control. Tipping culture is absolutely out of control. It's like everybody is wanting tips, and people who never traditionally wanted tips before are now asking for tips. So it's like, what the heck? And I understand that, times are tough. But it's one of these situations where, where do you draw the line? Could we perhaps pay people better so they don't have to, be asking for tips constantly? Ian says, went to Simply Wall Street to look at AQN. I'm out of free access. I intentionally do not pay for full access because I'm trying to buy less stocks. Maybe ignorance is bliss. I'll tell you a little secret, Ian. If you've got a second email address that for something else, you could always just log into like a Chrome or something with that second email address, then go to Simply Wall Street, and it will give you, what is it, 4 free? It'll give you the 4 free for that one as well. So you can kind of double it for free doing that way. So just a suggestion. And I think I probably will never get sponsored by Simply Wall Street because I said that. But heck, it's not like I'm saying it to a lot of people. Just 43, just 43. And Vic says, good move, Ian. All right. And I'm going to jump ahead just a tiny bit. We got a dividend coming in from the Banana Bread Company, or a super, but a super disguised as a dividend. So that is one. So if you guys do want that bonus Monday show, 3 more of those, and we are there. Thank you very much, Banana Bread Company. All right. Back to Vic. So just DCA 10% of each check to S&P 500 and call it a day. Al says, haven't heard Dickie D's for so many years. I don't even know if Dickie D's is around anymore. I haven't personally seen one, but I know, when I was younger, they used to exist. See you down 25% in the last 10 years. Okay. Fair enough. Fair enough. Oh, yeah. Yeah, that's rough. That is rough. It's one of those situations with CU. They sort of prioritized a lot of times. They prioritize their expansion over profits, and that's when a company does that, especially consistently. That's what happens to them. So they certainly need to. Yeah, I would say CU probably needs a whole new management team. So, but at the same time, they have, they have still maintained that dividend increase every year. And that's part of it too. A lot of times, if you're in that situation, their pride gets the best of them, right? So there's years where, you may not have the money to raise your dividend. So what do? You just take on more debt, raise your dividend, pay it out. You keep your title, but at the same time, yeah. Now, the other thing too, I would look at with CU is, they are part of ATCO, and I'd like to see that. I would almost say explore that relationship between CU and ATCO and see if there's something funky going on there, because sometimes you can see some strange things. So, for example, when you look at Brookfield Asset Management, so Brookfield Corporation BN. So when the old BAM.A split into Brookfield Corporation and the new BAM, one of the things BN did is took all of BAM's debt. They just took it all on. So it all got piled into BN. So BAM has no debt. That's the reason why BAM has no debt, because BN took it all. And what that does is it does make it harder for BN to grow, whereas BAM, which is of course where they put all of their premium assets, and that's what they kind of designed it that way, because they want BAM to be, being that superstar compared to BN. So just something to sort of keep in mind. CU looks like a saw blade over 10 years. Strong pattern. Why? I'd have to really look into that 10 years. So like I said, just to see what's going on, look at that relationship with ATCO, see what kind of trends are happening over the 10 years. I don't know it off the top of my head. Let's see. And Chad says why I sold CU and bought Hydro One. I do like Hydro One. They're a good company. They're definitely a good company. All right. Vic says in Northern Alberta, light out to 11 p.m. The adults post CA Abbey got the munch. Okay. I'm not sure what you're saying, Vic, but it sounds interesting. Should I sell Pizza and buy RMAX? Oh, see, this is that thing, right? Pizza is currently, they're struggling a little bit right now because all of these type of companies are. They are going to recover. Like I have been adding to Pizza for the simple reason I do know they're going to recover. But I'll tell you, if you're in a situation now, if you're still in the green with Pizza, like if you had bought quite a while ago, you might be. Then that's not a bad move if that works for your portfolio. But I do still have faith in Pizza. So nothing to say you can't have both, right? Ian says nighttime ice cream truck equals drug dealer truck. Maybe, maybe. I don't know. But I always find it weird when it comes driving through the neighborhood. And it doesn't stop. Like I've never seen it stop. It just has the music going. So kind of interesting. Chad says, like my pizza stock, it will go up again. Yeah, absolutely. That I have no problem. And they do have a good dividend. Anybody interested in the A&W Royalty Fund? So that's another good one. So, Pizza, you've got A&W. You've also got like Boston Pizza. Sir Royalty is that one that I like, and they're down big time. But it makes sense when you look at something like Pizza, and then you look at a company like Sir Royalty. The restaurants that Sir Royalty has under its royalties are things like Jack Astor's. There's the slightly higher end, almost pub-like restaurants. So, people would be more likely to go out to a pizza when money is tight than to, a sit-down Jack Astor's. So that's, to me, that makes perfect sense. I think they're all going to do a little bit better. And I think A&W, I think they're a good company. I think it's a good stock. Chad says, I've been loading up URA, CCO, and URC going to need power for all these data centers. Yeah, absolutely. Absolutely. I mean, I'm pretty bullish on uranium, but I mean, uranium, and part of the issue with uranium right now is the believe it or not, some of it goes to Germany. So the last new government in Germany, they kind of started taking Germany backwards. They're like, yeah, we're going to rely on hydrogen, completely on hydrogen. And they're going to build facilities, even though they don't really have the hydrogen yet, and they're going to build facilities. So they started decommissioning a lot of their nuclear reactors, or putting the plans in to decommission them. So that, of course, that doesn't help uranium. All of a sudden, you've got all of these reactors coming offline that are no longer going to be using uranium. And it's kind of a weird situation over in Germany, where, they had this reputation. Like, Germany used to be known, as that very environmentally friendly, great place. And now they're going to hydrogen. And yeah, it's going to be interesting to see how that all turns out. But I wouldn't have moved off of nuclear. I would not have moved off nuclear for sure. Now, Ontario, from my understanding, Ontario is going to be adding more nuclear power plants. So, that will help with that uranium demand. But I do think nuclear is going to still become big. I was just very disappointed that Germany's moving away from it. Let's see. Ian says, I had to pause. Now I'm playing back at 1.5 times speed to catch up. Okay, there we go. There we go. Ian says, I had little to no exposure to the S&P 500. Now 30% of my portfolio is SPYI. It's an ETF, so I don't feel so bad for overexposure. Well, and keep in mind, the S&P 500 is not one sector; it's a whole bunch of sectors. So, with an ETF like this, you're getting exposure to a lot of different sectors. So that's not too shabby. Terry says, I got fired from Dickie D in 1982. What were you doing? Were you eating the product, Terry? I'm thinking that's the only way. It's like, yeah, I have no ice cream left. Oh, you sold it all? No, it was just a really hot day. I needed to cool down. Chad says, got fired from Burger King for eating the food that was meant for the trash. Oh, yikes. Yeah. It's funny. I mean, because places like Burger King, it's like they keep track of it. Now I used to know somebody who worked at Burger King, and what they would do is they would make a burger that they wanted, and they would put it on the trash, and they knew it was for them, and then they would offer to take the trash out. So I was always wondering, they're just out there eating their burger while they're composting everything else, or using whatever the machine is. So interesting. Amvat says, ENCC 5-year price and total return outperformed one of the best. Retire portfolio would 25% ENC, 25% HYLD, and 25% health, 10% BK, and 15% VFV. Good, stable, diversified, and income. What's best? It really boils down to how you're sort of looking at it. So I would say, once again, with ENCC, it's a fantastic stock. I mean, I would say 20% if that's your only exposure to energy. 25 is still doable though. 25% HYLD. So that's your exposure to the US. So, you could certainly look at some of these. Now, I don't know what you're looking at for health. Let's see, 10% BK, 15% VFV. Yeah, I mean, now keep in mind too, HYLD is going to give you a lot of the same exposure as VFV. But VFV is, I love the Vanguard ones, because you take VFV, it is, if we have blue chip ETFs, that's definitely a blue chip. To me, that's a great foundation ETF. It's strong. It's got a lot of good stuff in it. It's not too shabby. Al says, does Pizza still have $1 slices? I don't know. I haven't actually been into a pizza in a while, but I would bet you, I would bet not. I know one of the things I used to like when I used to live in Vancouver, there's so many places you could go in downtown Vancouver and get these $1 slices that were so good. Um, I don't even know if those still exist anymore. Anybody in Vancouver, how much are they charging for those walk-in one pizza slice, down around Granville and things like that? Chad says, not sure pizza don't do good here in Saskatchewan. And Enid's saying, I doubt it. Yeah, probably not. That's what I'm thinking. Germany is slowly pulling the nuclear energy purchases away from Russia since the war. Yeah, it's kind of an interesting thing because, as Russia turned off a lot of their oil, one of the big moves with Germany is they've decided, well, we're going to go to hydrogen power. And that's one of the reasons that Germany has struck up that deal with Canada. And that basically that green hydrogen plant that's being built in Newfoundland, most of that is already earmarked to be going to Germany. So that's going to be interesting. Enid says, Al, you are in the US. Your food is much cheaper than in Canada. You may find $1 slice of pizza. I don't even know in the US if you're going to find $1 slice of pizza. I think I read that like a year ago. Yeah, there are dollar. Okay, so there are dollar slices somewhere. I used to eat the 7-1 products or is that 7 or 7-Eleven or is that 7? Yeah, I think 7-Eleven. There we go. Yeah, 7-Eleven. Holy banana guy. You guys are just blowing up chat. Let's see. We are allowed to eat the pull off the shelf food at 7-Eleven. It was all going to end up in the garbage anyways. So all the employees used to eat the food during our lunch, dinner breaks. And and that makes sense. Like when I used to work at Burger King when I was a teenager, anytime I did the close, at the end of the night, if there were like, any sandwiches left, the managers that I used to work with were like, let's split up what's left. We'll take it home. That was the only time they were really nice. So usually I could come home at night with like maybe a bag full of a hot apple pies and things like that. So that was always kind of fun. Al says we were allowed to eat and to pull off the shelf food at 7-Eleven. It was all going to end up in the garbage anyways. Yeah, and that makes sense. Like, why throw something in the garbage if you've got a hungry employee there that can eat it? So give it to a person instead of one of the seagulls out in the parking lot. Would take the expired food home all the time. All right. Michael says, let's see, GES and GPS, which GPS beat and gap up to selling off? I think the recession world spoken on CNBC. Yeah, there's, that recession word. It's one of these things, like, especially when it comes to news, people will throw that word around because it gets clicks, it gets views. It gets people a little bit worried, like, oh, I better check this out. Now, with the U.S., the economy in the U.S. is so strong. A technical recession is pretty much impossible. It's not. It could happen in Canada, but I still think, like I mentioned earlier, I think the Liberals are not going to let it happen. I think they will do whatever they have to try to prevent us from moving into a technical recession. All right. Let's see here. Oh, Al is from Saskatchewan. I did not know that. Interesting. Abalash says, any good hydrogen stocks to buy on the TSX? I have a video on hydrogen stocks, believe it or not. Now, I haven't looked at hydrogen stocks in probably more than a year. So I'd have to actually do a little bit of research before I could answer or even suggest a hydrogen stock that I think might be good. I think we might still be a bit too early. Like, as the demand for hydrogen starts to pick up, I think, but being too early sometimes is a good entry point. So, let me look into the hydrogen stocks for you, Abalash. All right. JJ is in the house. Hey, fam. Awesome. Good to see you, JJ. Now, JJ, if you guys were over in Discord, JJ and Vineet actually met up. And there's some picture of the two of them together. I was just like, this is awesome. It's like a mini community meetup. So that was really awesome. All right. Moose Jaw. Let's see. Oops. I can't handle the city life anymore. Too busy. Oh, I'm almost caught up, which means we can go to the next news article. All right. Let's do that. And bang. We'll get here to the next one. Ha ha ha. So, some interesting thoughts going on. So, China apparently has suggested they could hit back hard if Canada were to go ahead with tariffs on Chinese EV exports. So Ottawa has currently started a 30-day public consultation on possible responses to China's, and this is the quote, state-directed policy of overcapacity undermining the Canadian EV sector's ability to compete in domestic and global markets. Um, yeah, I mean, I don't see it as being quite that bad, but one of the options that is on the table is, of course, the tariffs, and that's the thing that China is not too keen on. These tariffs will probably hit mostly Tesla vehicles that are exporting from China. So this could also annoy Elon. That's funny, Telon. So yeah, we could be aggravating poor Elon Musk at the same time. Though I think Trudeau aggravates Elon enough, so we'll still see a lot of that. So currently, the Canada-Chinese relations, as you know, they're already strained. We had a lot of different reasons for that. One of them, of course, being some of that spying stuff that was going on recently. So some officials are fearing a retaliation if we move ahead with the tariffs. And what that could be is some form of an impediment on our agricultural exports to China, or they could ban some critical minerals. One of them I heard was graphene, but we've already invested in a Quebec company that is going to look into some graphene for us. So that is not too shabby. All right, we got through another news article. I love it. Let's drop another membership. Let's do that. All right, give me a second here. All right, I'm just hitting the buttons. Oh, I should probably hit the right buttons. Here we go. There we go. All right, bang, it's happening. Let's see who wins. This is the exciting part. Come on, hurry up, YouTube. Give us a winner. And the winner is JJ Pandy. There we go. Woohoo! I love it. All right. And all right, let's see here. All right, Amvas says, if living off distributions in retirement, should covered call ETFs be better than a core VFV? Would an XEQT better than 10% divvy covered call selector ETFs? So the big thing when you're putting together a retirement portfolio that is income based, what you have to do is, and we talked about this on the one-on-one that we did on the weekend. You really want to look at how much money that you actually require. So that's going to really, really come in big time. So if you need X amount of dollars a month to survive, you're going to structure your ETFs overall to hit that number. And of course, if you don't have to go full to the metal income on all of your ETFs, then you want to start sort of backfilling and coming in with a lot more of the stable ones. So things, for example, XEQT, that is an all equity. That's a fantastic diversified ETF. So that's not too shabby. You can certainly put that in there once you're, and this is once you're at that point. Now, as you're building up to it and you're not ready to completely start your retirement portfolio, so you're not yet ready to retire, at that point, I will usually say is, keep a good amount of some total return stocks in there just to make your TFSA bigger. So that way there, when you are ready to pull the switch, you have more money in your TFSA to work with, which will help it. So for example, if you want some of those XEQTs in addition to your high income stocks, that will help give you more money to be able to structure things and basically work at getting a bit more extra diversification in there, in addition to, of course, all of the high income. All right. JJ says, was fun. We got to host more in-person meetups. Yeah, absolutely. That would be kind of fun. Let's see. Kevin says, $1 slice of pizza hasn't been seen in years. I know. All right. So JJ says, pizza slices are more like $5 now. Yep. I can see. And Elon Musk. I said it. JJ says, I'm planning a month-long trip with my significant other to celebrate our 4.5-year anniversary around Europe in October. It'll be my first time in Europe, so got lots of planning ahead to do. Awesome. That sounds like it would be a lot of fun. Holy cow. Yeah, you'll have, oh, that'll be a blast. And you know what you can do, JJ? You can fill the Discord with some pictures if you want, because I'd love to see them. That's for sure. Let's see. Yeah, Montreal. So Europe would be cool. Oh, dang. Congrats. Go, JJ. It's your birthday. Here we go. Let's see. Thanks, Mama Candace. You the best. There we go. Congratulations, JJ. All right. 9 says, I'm holding VDY, XEI, VFV, XEQT, and VEQT in my non-registered. Seems good tax-wise, mostly eligible dividends and capital gains. Yeah, and that makes sense. That's the thing, too. Once you get to a point where you've got your registered maxed out, that's where you're going to put those ones. Anything that could have any kind of tax implications, you want that in your registered accounts. So, I would go for a situation in my non-registered where, I have lower dividends, probably Canadian eligible dividends if possible. I would shift things around a little bit to try to achieve that. So that way there I'm paying, I always like to say, pay as little taxes as you can. There's no reason to pay more taxes if you don't have to. JJ, if y'all got suggestions on where to visit in Europe in October, I'm open to suggestions. Ooh. So yeah, that'd be interesting. I don't know. I've never been to Europe. Probably vlog our travels. Ooh, that'd be neat. Enid says go to Paris. Chad said Italy. Let's see. Got ICLN ETF from ChatGPT. Appreciate your thoughts for long term. Thanks again. ICLN. That's interesting. I don't know what ICLN is. Bring it up again for me after we get through the news, because then I can switch around here a bit and pull up stuff, and we can actually look at that. So speaking of the news, let's get another story done. Otherwise, otherwise this one's going to turn into that 8-hour stream at the rate we're going. All right, let's see here. Okay, I was looking at number 3, and I was like, oh, all right, I do have it here. Okay. So copper theft, we got a copper theft problem. So in Canada, copper theft is on the rise, as of course, the price of copper has been going up. So some of the Canadian telecom companies have been asking the government for stiffer penalties, as thieves have actually been causing outages as they boldly cut wires from poles to sell. So there was, I think TELUS had an issue in around Vancouver where somebody cut a bunch of wires. It's just crazy that these thieves are pulling the wires off the poles. That's just crazy. So the number of incidents, they grew by about 200% annually from 2021 to 2023. And and this is from the Canadian Telecommunications Association, it says that some of the service interruptions have become a matter of public safety because, for one, some customers can't even call 911 if they've cut the wires on them. The other thing, too, is, these guys are criminals. It's not like they're electrical engineers. They cut the wrong wires and they could get electrocuted. So there's a lot of danger to this as well. Now, overall metal theft. Now, we don't actually have a statistic just for copper because the police, they just lump it all together as metal theft. But they say that overall metal theft has grown 56% since 2018. So right now, if you get caught stealing copper, whether it be off a pole or from a building or something, you can face up to 10 years in prison if the value of the material that you're stealing is more than $5,000. So, if you're stealing less than $5,000, I think it's, it's less. I don't know how much less it would be, but now some provinces, I think Alberta and BC, they've brought down their own legislation to start cracking down on copper theft. What they've actually started doing is that they've made it the law of the provinces to basically require sellers to use government ID in order to sell at scrap metal yards. So this way here, it makes them a bit more accountable and easier to catch. So, it's one of these things, like, even if you took, 10 years, even if you knocked that up to 15, is that really going to stop people from stealing the copper? I know a lot of places too, even if you're building a house, some people have had to actually hire private security guards to watch the house at night once they start putting the wiring in, because the thieves will just come in and steal it. So what can I say? What can you say to that? That's just craziness. All right. Holy banana bread. You guys have just exploded here. France and Italy, definitely on our bucket list. There, go to the Czech Republic. Let's see. You don't need, yeah, it is true. When you're looking at XEQT and VEQT, they literally are the same thing to a certain extent. Now they have so much in them that you technically don't need both. Some people will go with the VEQT because they love Vanguard, but some people will go to the XEQT because they pay dividends more often. George says, do you see bird construction continuing to rise for the next year? It's hard to say how much they're going to rise. I don't think they're going to rise as much as they already have. Like, I think most of the big growth is probably behind them, but I could always be wrong. I have been wrong in this before. Here's the thing. There is a demand. Bird construction right now, they're in a very good spot. There's a huge demand for their products, for their services. So for that matter, I don't see them as going down. They may have a small correction, but I think they're going to do well over the following year. I would actually love a correction because I'd love to get some more, because I bought in a few stocks before they exploded, but now they've exploded and I'm like, but I do feel very bullish on them long term. They're not going to have that, sort of the NVIDIA type rise, but I think they will still do well over the year. Go to Portugal. There we go. I only have I only have Canadian eligible dividends paying stocks in my not perfect. That is perfect. I love that. 9 says, I know JJ and I like to diversify fund managers as well. Okay, and that makes sense. That makes perfect sense. Michael says, don't you think tech is overbought with certain other sectors selling off? And I heard in October that markets will sell off, which this market doesn't look safe any longer. Okay. It is fair enough. Tech has exploded big time. And when you look at the charts, you can see, you're like, okay, they're ripe for a correction, but it's really hard to say. Like, I always look at it this way. Tech, if you're buying tech right now, and let's say we do have a correction, to me, that's more of a better chance to start averaging things down a little bit. Like, tech is always going to recover, even if you have a correction. And I don't think we're going to have, like, there's been people saying, like, for example, even a year ago, people were saying the AI bubble it's breaking. Tech is going to go down. Tech is going to crash. NVIDIA is in trouble. And I've been hearing this for a year, and it hasn't happened yet. And the truth is, until it happens, nobody's really going to know. Could it happen this week? Sure. Could it happen next week? Sure. Could it maybe not happen until 2025? Sure. That's the thing. We don't know which is going to be the case, but it's going to happen one way or another. Everything comes up, everything comes back down. It's just the way that the market works. So something to keep in mind, that it will happen, and we'll deal with it when it does. But if you're holding things like, let's say, Microsoft, NVIDIA, if these are some of your core holdings and you're looking at them with a long-term goggles, then if anything, if it happens, you should be like, yeah, this is great. I can get some cheaper Microsoft. I can get some cheaper NVIDIA. And that's how you make money, right? When you look at, so for example, a bear market, when we go into a bear market, a lot of people get into the whole panic mode. It's like, oh my God, the bottom is not in. I can't, I have to worry because bad stuff is going to happen. Everything's going to go to zero. And they're not buying. They might actually start selling, or you get these people. And I've seen this where somebody's like, Yeah, we've entered a bear market. I got to move everything over to cash. I'm going to take losses on everything because it's all going to zero. I just, and I'm like, oh my God, that's crazy. Because, bear markets, they come and they go. Maybe for 2 years, you're sitting on the stock and it's going to be in the red in your portfolio. But here's the thing. If you're continue to dollar cost average, so, and I mentioned this, I think, to Ambas yesterday. If you're going down, if it goes down into a bear market, and if you're actually dollar cost averaging going down, well, you could, because, as you're lowering, you're taking your adjusted cost base down with you, you can actually cut down the amount of time it takes for you to break even again. So, when it starts to come back up, it may only be a year for you that you're back in the green because you've been buying the lows. Whereas that person who sold everything, well, they're, once the market looks good again, they're like, oh, I got to start buying. And now they're buying highs instead of lows. Oh, I should have a drink of coffee. Holy banana bread. Oh, that's so good. But yeah, so that's the thing. You want to be, buying low, selling high. It kind of works that way. You can't let panic be the mantra, because that's how the rich make more money, because every transaction on the stock market. So when you are selling, so when it goes down and you're panicked and you're like, oh my God, the sky is falling, and you sell that stock. So, we'll use NVIDIA. So you sell your NVIDIA stock at a loss. Well, on the other side of that transaction is the smart investor sitting back saying, ooh, I'm going to buy NVIDIA now because it's low. So there's always a person on the other side of your transaction who is buying. And that's, that's where the smart money is. They're buying when it's low. And that's bringing down their adjusted cost base. And next thing you know, when things are heavy or high again, some of them will, some will sell. There are some people that's what they do. It's like, they'll buy a whole bunch of NVIDIA when it's low. And when they start hitting these all-time highs, they'll sell it. And then they'll just sit back and wait for the next bear market. And when the next bear market or the next big correction comes, they start buying from all the people who are afraid, who think the sky is falling. And they're buying all of that stock, and then they're just waiting again. And when it goes back up to new all-time highs, which is probably even higher than it was before, they're selling again, making profits. And they just rinse and repeat. And that's how some people will actually get rich. So, just something to keep in mind. All right, JJ says, let's see, just means we're rebalancing work to do it. All right. Let's see, I think tech oversold, but just a clown in the net. We'll go from chips to software and data centers and power centers. The larger your portfolio, the simpler it should be. Just my vibes. Stealing wire. Yep, it happens. It sure does happen. I had my home air conditioning unit stolen before because of the copper wiring. I know. Paul says thieves cut cables thinking they are copper, but are actually fiber. And even more customers go down. That's the truth. That is absolutely the truth. That happens. Terry says New Brunswick copper theft has silenced both Rogers and Bell at times. Yeah, absolutely. Oh, we got another super in here from Banana Bread Company. You received a dividend. I love that. That's the best. That's the best message ever. That's two. We're 2 away from a bonus show tomorrow. And look down here. We also have a super coming in from Paul. I think this is a super sticker. So yeah, that's fantastic. There's 3. So 1 more, and we do have a show tomorrow. All right, now let's see where the banana bread was high. You guys are just keeping me busy today. You guys are just absolutely keeping me busy. Enid says in Surrey, BC, where I live, they are cutting off catalytic converters from the SUVs parked on the street. That's crazy. That is crazy. Michael says, I only look at a few penny, but they are in certain sectors with no debt. Yeah, that's the thing. I mean, if you are going to dabble in penny stocks, make sure they have sound fundamentals. If they have sound fundamentals, you're increasing your chances of not getting slammed. But there's still, it's still risky, but it makes it a little bit less risky. So there's, it's sort of a good way to use risk management. And JJ says, I just keep buying. All right. Let's see here. Whoops. Tech is the new oil. It seems that way. It seems that way. Michael says, I've been looking at NVIDIA. I did get a downgrade Friday, which the president and CEO selling like $19.99. Yeah, NVIDIA, I heard about the downgrade. I didn't fully read the article yet on it, but I'm still, like I said, I'm still very bullish with NVIDIA. Right now, they really have no competition yet. And it's not the chips, remember, guys. It's the software that brings the chips together. That's kind of their big thing. And right now, from what I've heard, and I did, maybe I'm wrong, but I did hear this article where they were saying most companies are about 10 years behind technologically where they are with their software. So that'll be interesting to see. It'll definitely be interesting to see. 9 says 2008 GFC felt like everything was going to zero at the time. Yes, the great financial crisis. That was actually interesting. I actually lost a job because of the GFC, and that was because I was a training manager for a company called Uniserve, and they just acquired an American company. So they put a ton of money into the U.S. just before the crisis. And that crisis nearly tanked the company. The company survived, but they had to make a lot of hard decisions. And I was one of those decisions, which is funny. But being as insightful as I am with the news and stuff, I basically in 2000, and this was all happened in 2008. In 2008, I saw it coming, and I predicted that I was going to get let go. And I told a few people, I said, yeah, I'll be probably on the chopping block within about 2 months. And pretty much 2 months to the day I said that, it happened. I got a nice severance, so I wasn't too upset, but it was just one of these things. It was like, it was just bad timing. Now, mind you, when Uniserve had bought this U.S. company, they were just looking at expanding. There was no signs that, that all this house of cards was all about to collapse. So, for them, I can understand them sort of waddling into that. So what can we say? Let's see. He only sold off 164 million. He has 100 billion in NVIDIA stocks. Nothing wrong with selling some out and diversifying it. Absolutely. And, and that's where you have to sort of start looking. And because, I look at it this way. If I have a company and, I may sell stocks off for certain reasons, but you also have to look too, in a lot of cases, a lot of really rich CEOs, and sometimes you'll hear that some of them don't even accept salaries from the company. And the reason they don't is they go with stock options. And the reason they'll go with stock options is that because they're receiving stocks, right? It's not income until they sell them. So they can get all of this income that's not being taxed. And then here's the beautiful part of it. Instead of actually even selling these stocks, they can use them as collateral for loans. And then the interest on the loans become write-offs. So that's how, like, if you've ever wondered how sometimes some of these really, really, really rich people can sometimes have almost no income and pay no taxes, it's because of maneuvers like that. And it's not just stocks. Sometimes they'll do it with, like if you buy a really expensive piece of artwork, you can then use that as collateral. And then, you borrow all that money, you live off of that money, and you're getting tax breaks because of the interest on it. So yeah, there's a lot of interesting ways to play the game when you got crazy amounts of money. Let's see. Jensen sold a couple 100K in shares and only has 79.5 million left. Yeah, there we go. Ian says averaging down starts to feel like throwing good money after bad sometimes in a bear market. Happened to me with ENB. Yeah, it can certainly feel that way. And especially if you're looking at something that is going to take longer to recover. So with the bear market, when you were going into that bear market, none of us suspected, most of us didn't suspect that we were going to have a situation where the rates were being thrown like crazy. The rates were going to go up, up, up. That absolutely threw people, and some companies, especially utilities, instead of having that nice curve out of the bear market, they kind of just sort of went flat at that point. And, that includes Fortis, Enbridge, but these are going to be fine companies. It's at a point now where, you can continue to DCA. They are going to recover, but they're not going to recover as fast as well, like tech. Look at how tech also was the first to go into the bear market, and they were the first to come out. So sometimes it's interesting to sort of watch little things like that. JJ says, buying low and selling high works great in theory, but in practice only works a fraction of the time because of FOMO. Yes, so the fear of missing out. That's that one thing. You have to be able to check your emotions when it comes to trading. And what I often will say is, if you're a person who you can't check your emotions, and that when the stock's going to the moon, that you're going to be wanting to just buy, and when it's falling, you're going to have all of that fear, uncertainty, and doubt, and it's going to make you want to sell to try to cut your losses. Well, you may not want to be investing in individual company stocks. You may want to sit back and say, okay, I'm going to be an ETF investor, because then you at least have a management team. So if things are going wrong in that portfolio, in that basket of stocks, they'll get rid of the losers when they do their rebalance. If, let's say, they rebalance twice a year, every 6 months, they're going to go in, they're going to say, okay, these are the underperformers. Let's either remove them or just change the weighting so that they have less weight, and then move things towards. Now, keep in mind, though, if you have an equal weight ETF, then they're not changing the weighting. They'll just boot out a company that's not pulling their weight and replace it with somebody who's doing better. Yeah. All right. Paul says, selling just realizes the loss. Just wait for a few months. So Bitcoin. Yeah, exactly. Bitcoin is a perfect example. People always get shaken out of Bitcoin. And people, when you look at the FOMO FUD cycle, there's so many people that lose a lot of money in Bitcoin because of that severe volatility. It's enough that when it starts falling, you're thinking, oh my God, is this like 2021 when it went down to 16,000? And then you jump off, and of course you jump off, and next thing you know, 5 minutes later, you're looking, and it's already a couple thousand above where you jumped off, because it's already rebounding, and you're like, no. And then, as it goes up, you're like, I got to get back in. I don't want to miss the trip to 100K. And you buy. And then, of course, it changes direction again, and you sell. It's like, oh, dear, what's going on? All right. And Kevin says, sell your NVIDIA and buy Pizza or BCE. I have a feeling he's being a little bit sarcastic with that one. So let's see here. Abalash, what do you think about gold? Looks like a lot of central banks are buying it as a safeguard against the USD falling. Yeah, gold right now is having a good year, and it is predicted. Most analysts believe it is going to be going up over the next year. So it is. I think there's a lot of potential for some good growth with gold. Also, don't ignore silver, because right now, silver is going up for not the same reason. Part of the reason that silver is going up is that it's a critical metal. It's used in things like solar power uses silver, and a lot of different green technologies are using silver. So that's creating a big demand for it. So silver, I think, don't ignore it. Don't ignore silver this year. Let's see. Or CU. Let's see. Ian says, I need a Canadian and a USD high dividend stock to buy in my TFSA. Interesting. Interesting. I don't have any off the top of my head, but if anybody wants to throw some suggestions out there for Ian, feel free to. CC says, S&P 500 went up all week without NVIDIA. First week it's done so since last year. And that's not a bad thing. That's not a bad thing at all. Yeah, I definitely, it's kind of interesting. Like I think NVIDIA is still going to do fine. I think NVIDIA still has some surprises in the tank as well. But it is good to see the overall health of the market. So when the S&P 500 is moving up without, without the power of the Magnificent Seven, or at least with only part of the power of the Magnificent Seven, that's not a bad thing at all. All right. Oh, no. Okay. So, all right. So Kevin actually sold 20% of NVIDIA and put it into Pizza, BCE, and TELUS. Okay. Fair enough. And I mean, all three of those are going to rebound. So that's not a bad buy. Not a bad buy. What does the bread company trade under? Oh, okay. So, yeah. So the banana bread company, they're basically, they're a fictional company because of, one of my key sayings is that when something excites me, I will go, holy banana bread. And that's where that comes from. So whoever is running that account, I don't know who it is, but they come in and, they come in and they do that little dividend thing, and it's awesome. I love it. But I don't actually know who it is. I've had suspicions, but then I keep, then it's like I see them and the same person at the same time. I'm like, oh, well, maybe it's not them. And so I really don't actually know. And I kind of, in a way, I kind of don't want to know, because it kind of keeps it magical. It's kind of like Santa Claus showing up every so often. And it's like, oh, hi, Santa. Other than I'm not going to sit on the banana bread's knee, but, still. Amvas says, for savings towards a home to buy anytime now, how would you invest the funds? Okay. So, all right. So you're saving towards a home. So in a case like that, once again, if you don't need to even be looking at income at that point. You want to be looking at one thing. You want to be looking at total returns. You want those stocks that are going to grow that savings as fast as possible. Especially right now, when you look at the fact that a down payment on a home is just almost out of reach for a lot of people. So you want to look at it that way. Now, there are a couple of other options. So you will have the first home, the first home savings account, so that for, if you have not owned, well, even if you owned a home, there's a bunch of qualifications. So I think right now, as long as you're not in your primary residence, or you haven't had a primary residence for so many years, so that's one option. So it becomes like a TFSA. Another option is you could conceivably use your RRSP towards the down payment. So that is something that is allowable with that account as well. And in that case there's different concessions that are there for it. But when it just comes to straight up growing, so whether it be in your TFSA or whatever account it's in, you basically want the most bang for your buck. To get the most bang for your buck is going to be your total return. Now, some total return do have half decent income, but that will be where you'd want to go, just because your goal is to get that money quicker opposed to sooner. And, a 14% dividend is great, but if you've got a stock that's giving you a 5% dividend and plus it's growing 15%, that would be a 20% total return stock. So that's going to overall grow that portfolio a little bit bigger. But you also, in a case like that, you want to make sure any dividends that are coming in are going straight back in. So reinvest, get that compound working for you. And that's the way to go. Al says, let's see, I thought one was not supposed to have U.S. dividend stocks and one's TFSA. Yeah, I mean, with U.S. dividend stocks, if you have it in your TFSA, the IRS takes their 15% off of your dividends, and that's gone forever. There's no avenue to get that back. So I tend to, if I'm going to have a U.S. stock that pays dividends, I usually go for ones that pay very little dividends, so I'm not worried. Those ones will be, for me, more of a growth-focused thing. So, for example, in the 0 to 100K challenge, I have that AI ETF in there. And with that one, it does have I think it has a dividend. I think it's like a really small dividend. And, 15% of a really small dividend really isn't much at all. So I'm not too concerned. But if I had a U.S. stock that was paying me a bigger dividend, for example, I think Union Pacific has a pretty half decent dividend. That's one I would probably want to hold in my RRSP, just so that way there I'm getting all of that money. But keep in mind, I always say this, when you put something in your RRSP, it becomes 100% taxable. So even though you kept the IRS from getting that 15%, you're now paying tax on that whole thing when you do pull it out of your RRSP somewheres down the line. Though, in all fairness, the money, at least the capital that you put into that RRSP, that part will at least give you a tax break now if you want to use it, or you could hold it for a year that you're just making a bit more money. So just something to keep in mind. All right. Let's see here. Let's see. Downgrade is propaganda. NVIDIA is the total package, not just a semiconductor company. All right. Someone will come for their lunch. Oh, so for NVIDIA's lunch. Yeah, I mean, there will always be, there's a lot of tech companies out there, and yeah, they would love that piece of pie. And eventually they will get there, and NVIDIA will have to sort of share a little bit. But, it gets to that point, though, when everybody's using NVIDIA, it gets a little bit harder to pull away some of that share from them. So that's one thing to keep in mind. And yeah, like probably, I would say 5 years, because even if everything is correct in that article that I had heard on the news about, the other companies being 10 years behind NVIDIA, they're probably working double time to get caught up. So 5 years probably sounds like more reasonable. And Chad's saying, I will take money off the table. It never hurts to take money off the table. You got profits, take your money off the table. Why not? See, good luck to them. They are a decade ahead. So right now, currently, and yeah, Kevin's done well. Kevin has done well. He's up $150,000. That's absolutely awesomeness completely. All right, let's see. All right. Ooh, you guys are so far ahead. It's incredible. Actually, before I go any further, I should drop another membership because I feel like I'm getting far behind today. What can I say? All right, let's see here. All right, bang, bang. All right, let's see who is going to win. I don't know. There we go. I have one last click. All right, let's find out who wins. And our winner is Cece. Congratulations, Cece. You have won a membership for the next month. Fantastic. Let's see. Kevin says, why do you think their PE is 50 and AMD is 250? All right. Let's see. I'm not saying so, everyone. That's okay. Let's see. Only. All right. As I try to get caught up here. All right. All right. I'm going to skip a bunch of this conversation that people are having with themselves. Abalash, anyway, to buy silver-based ETF or stock on the TSX. So here's the interesting thing. So right now, most people have been actually buying physical silver. So that has been a big movement. Now, keep in mind, just because most people are buying physical silver does not mean that you're not going to get the same value from an ETF. You will still get the same value from an ETF. I like ETFs only because it helps take that guesswork out of if you pick one particular silver company and they just happen to be badly managed, or they just happen to have a mine in a country where they run into some kind of issue with the government, that can hinder you. When you do go with something like an ETF, whether it be silver, whether it be gold, that's not a bad choice. It also helps take a lot of the need for you to really get in there and do a ton of research. It does help up on that because you just basically need to look at that ETF, how they performed. Definitely, I always say before you buy an ETF, at least go to the website and look through the material on there. There's a lot of great information there. Let's see. ETF, you don't hold silver, you hold paper, buy physical metals. So, and Chad's in the physical metal group right there. Let's see. Cece, lots of people pushing the call put wheel, actual risks, thoughts. Absolutely. I mean, when you're going into options, there are going to be some risks. And I think with any kind of trading where you're looking to make money, whether it be day trading, options, swing trading, there's always going to be a little bit of a learning curve. So, I mean, I'm okay with people going into it, But I always say play with it a little bit. If you could find, and I don't know if you have a place where you can do some paper options, so where you're not really doing real options, that would be really kind of cool, because that would give you a bit of a chance just to make sure that, one, you get a good grasp on what you're doing. But one of the nice things is that, a lot of times, even when you make bad moves doing options, a lot of times, because you're collecting these premiums, it can take the sting out of a bad call, or put in this case. It can take that sting out. And that's not a bad thing. That's not a bad thing, because it's nice to know that at least, because whether or not an option that you've written, bought, sold, well, in this case sold, because if you're getting the premium, you're the seller. Whether or not it succeeds or gets liquidated on you, you still get to keep that premium. So that is kind of a neat little way to help isolate you a little bit from what can go wrong. Chad saying BTC will rise at the end of this month again. It's a possibility. I mean, normally it takes from 3 to 5 months after the halvening, and we're moving into that zone. So I'm hoping, I'd love to see, like, I know when I was talking to Ambas on the weekend, I was telling her that I'm one of these people. I would love to see it go to 100K, go past 100K. I won't bet the family on it. I won't bet the kitchen sink on it. But I sure hope it goes. I sure hope it goes. It would be a lot of fun to watch. And, I probably have about a 5% stake through some of my ETFs and stuff. So let's go. Let's head to the moon. I'm ready. Paul just bought some more Bitcoin. Let's see. Okay. So I missed the part where Amvas says she wants to buy a home now. Okay. I did miss that part. So, okay, short time frame, do stocks aren't really the way to go, hence my suggestion. Okay, fair enough. Yeah, I mean, if you're looking to buy a home like sooner than later, stocks are going to be difficult, only because to grow them fast, you're going to have to. Here's the other thing too. If you're looking to buy one sooner than later, it comes down to that deposit, right? Because you have to make that down payment. If you already have that, then fine. In that case, yeah, get it going. And then if you're looking at using your stocks to, for example, pay for your mortgage, at that point, then yeah, at that point, even going into an income situation where you at least pull out enough dividends from your TFSA to pay off your mortgage, yeah, you could do that. You could certainly do that. But you have to sort of weigh a few things. Oh, I'm sorry. It's been very busy in chat today. So, one of those things, like we're even really far behind in the news. So what can I say? Al says, I know good dividend growth U.S. stock, Ian. Amogen. Okay. Another great one is with less is Novaridis. PSA is great too, but it is less share increase. Okay. I have heard of Amogen. I haven't heard of Novaridis though. And hopefully I'm pronouncing it right. But yeah, very interesting. I'm going to have to see after the show. I might have to just start going through here and looking at some of these suggestions and taking a good gander. Paul says, if drops more, just buy more. There we go. Sometimes there are withholding taxes with U.S. stocks in a TFSA. Never have any with BHP and Rio. Had it with DOW, with Dow. See what happens at the end of the month with SPYI. Al said no withholding tax. Okay. Yeah, well, it comes down to where SPYI is. I think I have to look it up. I believe they're a Canadian company. If that's the case, and I think they're Canadian, if that's the case, then any taxes that are being charged, any withholding taxes. So when a Canadian ETF management team buys all these American companies, it doesn't matter where you hold it. It's not going to make any difference, because the IRS is going to take that 15% from all of the distributions from the American companies going to the ETF. And so when the ETF reports, you're going to get, let's say they're giving you a 10% dividend. Well, that means that they're giving you a 10% dividend. They may receive a little bit. They may not. I don't want to say they may receive a little more. Well, they probably will, because you have your management expense ratio. That stuff gets deducted as well. But they would have, if there were no withholding taxes from the US, they would have probably received a bit more, and maybe it would be 11%. I mean, or 11.5%. I mean, we'd have to sort of look at it, but that's kind of what happens. It all happens behind the scenes. You never see it. So when you look at a company like HYLD, for example, or any ETF that has a bunch of American stocks in it, the yield they're giving you, that yield is what you're getting. So simple as that. Just something to keep on mind. Michael says on Wednesday that Powell warned of a Bitcoin crash is the reason Bitcoin was down so much. I don't know if that was the reason in total. What I had heard is that I believe it goes back to Germany. I heard that the Germany government was selling off a bunch of Bitcoin, and that was causing some issues. And I even heard as well there was a oh dear, who was it? It was some big investor reached out and said, "Hey, let us buy the Bitcoin you're selling directly from you instead of tanking the market." I don't know whether or not they agreed to it or not, but that's what I had heard was going on. All right. Any alternatives to Timber Creek Financials on the TSX, example, private lenders? Well, see, Timber Creek Financial, I do like that company. Like they're very they manage a lot of property. So they're very much like a REIT. And they, and when you look at them and you watch how they behave much like a REIT as well. But I do like them. I do think as well, right now they're at 7 something. I do see them as getting back up to 9 within probably by the end of 2025. So, I think there's a little bit of money there as well. All right. Ian says, I have a lot of TF. The Fed's critical warning sparks serious 50,000 Bitcoin price crash alert as 20 billion is wiped from Ethereum, XRP, Solana, and crypto. Okay. Well, that could be interesting too. I didn't see that warning, but that wouldn't surprise me. I did hear about the Germany thing. I know Germany has sold a lot of Bitcoin, so that was kind of interesting. But yeah, this could be very interesting. Now, here's the thing. A $50,000 Bitcoin crash, I don't see that as happening. So yeah, it's kind of interesting. I have to read that. I have to actually read that warning to see what's coming out. It sounds to me almost like it's a little bit of fear mongering if that was actually said, because that's kind of interesting. Definitely interesting. Let's see here. Sorry, me and a Bitcoiner having words. I've been building up my position of TF. So far, I've been happy. Yeah, absolutely. Oh, and that was CC winning. There we go. Let's see. BB Co. I'll grow bananas. Yeah, absolutely. Banana Bread Company. I'll grow bananas. JJ, happy birthday and excited for your October trip. Clean and renewable. Potential growth to high focus on sustainable and climate change initiatives globally. Yeah, absolutely. All right. I got to get to the next news story because I got to get these out of the way here, guys. Let me just pull up the next one here. All right. So a little bit of a story on the Calgary Stampede. So it looked like there was going to be some issues with the Stampede because we had a major water main in Calgary that, well, it broke. So that issue, it's not that it's been resolved, but they have removed the indoor water restrictions about 3 days before the start of the Calgary Stampede, which of course is one of the biggest events for Calgary. Now, there are still limits on outdoor water use, and what the Stampede has agreed to do is that they're going to avoid using city water as much as possible. So, and keep in mind, the Stampede actually does use a lot of water. So, just if you've ever been to the Stampede, you see how muddy them chuck wagons get? Just think of the amount of water to clean them. So, hosing down chuck wagons. They also have misting station and fountains to help keep people cool because it tends to be hot in July in Calgary. And they're also going to be importing all of the water that they're going to be feeding to the animals. So that's fantastic. Now, why this is a big deal for Calgary is the Stampede. It actually pumps $282 million into the Calgary economy every year. If you've never been to Calgary during Stampede, you don't know what you're missing. First of all, it's almost, how at Christmas, everybody decorates their stores and puts up all of the Christmas stuff. It's kind of the exact same thing at Stampede, but it's all Stampede stuff. All the store windows have like cowboys and horses and stuff in all of their windows and painted on the windows. And it just gets absolutely crazy. And a lot of companies will even give you a day off during the Stampede so you can go, so you can go to the Stampede. So something to think about. But yeah, that's what's been going on in Calgary. All right. Whew. Michael says, I'm waiting for HPE to dip a little more since the partnership was announced with NVIDIA, which NVIDIA gets lots of products from HPE, which raises the outlook on earnings. That's an interesting thing too. Absolutely. It sort of reminds me of the whole follow the money thing. Like, if you've got if you got dependencies, for example, on NVIDIA, and NVIDIA's going up, a lot of companies can get pulled up that way. But always keep in mind, make sure that relationship is strong, because if it's a company that's providing NVIDIA something, but NVIDIA finds another company that can offer it to them cheaper, that company could conceivably fall to the wayside. So always remember that's a little bit of a problem or a little bit of a risk. But if you're paying attention and you're paying attention to the news, a lot of times you'll be able to weed that out before it actually happens. HPE, Dell, everyone is working with NVIDIA. Yeah, absolutely. I mean, NVIDIA is, everybody wants to work with NVIDIA at this point. Let's see, getting locked to their system. And as time goes by, they are more and more locked in and invested heavily into their ecosystem. All right. See, hundreds of thousands of GPU clusters soon and millions. Yeah. And this is the whole thing. As you're pulling more of these together, I mean, the amount of computing power that is being created is absolutely ludicrous. Now, one of the first things we're going to need to do once we do have AGI is we're going to have to get Chat GPT 7 or 6 or whatever at that time. We're going to have to get it to start working on how can we do this a bit more power efficiently, because training a large language model, so trading like a Chat GPT, a new one, it takes an insane amount of electricity. So once again, going back to uranium, let's get some more nuclear power plants going to help provide more energy for AI. All right. Let's see here. All right. Let's see. Base is a nice ETF for metals. Yeah, absolutely. Let's see. Oh, it's my childness. Okay, we'll leave that be. I'm just going to, any comments that are not directed at me or at the overall. So if you're just talking to somebody else, I'm probably going to skip it because we're so far behind today, but that's fine. That's fine. Let's see. I read a report saying the Fed may need to raise rates and had instead. You see, this is the thing. I've heard people mentioning this, but I will tell you, I went and looked hard and wide to see if I could find any validity to that. And everything I'm finding from Powell, it's not saying that. So I think we'll have to wait and see. I mean, obviously, if inflation were to turn around and really start kicking the U.S. butt, maybe. But right now, I would take that with a grain of salt until, for the moment, I would definitely take that with a grain of salt. All right, let's see. All right. Oh my God, I am caught up. This is fantastic. Let's see. Sorry, Candace. I try not to be so wordy before I plunge to any big decisions. I'm grateful to have another one-on-one since I'm new do-it-yourself investor. Considered keep some funds for home in cash. Okay, yeah, absolutely. So cash is nice, and that's one of those nice things about cash or PSA, because we were looking at that in our last one-on-one. They're a fantastic place to park cash just to at least get some money going. So yeah, in a situation where, let's say you have your down payment, but you're still looking, sitting it in something like cash is fantastic, because at least then you're getting that, you're getting that 5% on it. So you're at least growing it. And then when, the nice thing about cash is that, you just sell it once you need the money. Keep in mind that because you're doing it through a broker, you've got that T+1 that we're currently on when it comes to settling these things. So it'll take you a couple of days to be able to withdraw the money after you've sold it. But, just as long as you've taken that into consideration, you should absolutely be fine. All right, I'm going to get to the next news story. But before I do, let's throw another membership out. All right, let's do it here. All right, membership gifting. And here we go. Bang. It's coming. It's coming. All right, who is going to win? I don't know, but we're going to find out. And the winner is Mario. Congratulations, Mario. I'm waiting for everybody to start saying happy birthday to Mario in a moment, but yeah, congratulations. I think the only person who has a real birthday today, I think, is Prairie. Unless I misread that and Prairie's messing around with people. I don't know, but I think it was Prairie's birthday. But congratulations, Mario. That is fantastic. All right. We don't have that many news stories left. We'll just get through this next one here. Green aluminum. So this is actually a really neat story. So there's a company right now. It's called Rio Tinto. Now I've looked at them before, and they're interesting. Now they have developed a new aluminum smelting technology, and basically this technology, it will make aluminum without directly producing any greenhouse gas at all. So this is huge. This is huge. So the Quebec government, in fact, they're so excited about this, they have backed Rio Tinto with a $140 million investment. It's like, yeah, here you go. Let's get this going. So the plant should be opening in 2027, and they expect to pump out around 2,500 tons of commercial quality carbon-free aluminum every year. So that basically, if you want to sort of translate that into something a little more understandable, that's basically equivalent to 188 million soda cans. So that's huge. Now, aluminum right now, it is already one of the most used materials in the world, and demand for it is actually expected to jump by about 40% over the next 5-6 years. So by 2030. Now, right now, the main drawback is that its initial production has proven to be very carbon intensive, and except for now, not with Rio Tinto, but that's kind of huge. This is a huge thing. So this production plant, they're estimating that it could cut Canada's greenhouse gas emissions by about 7 million metric tons a year. So that's the equivalent of taking 1.8 million cars off the road. So think about that. That's insane. That's incredible. So when I'm thinking about this, I'm thinking Rio Tinto. I need to be paying attention to these guys, because this is kind of a technology that could really, really make them some serious dough, some absolute serious dough. So something to keep in mind. All right. CC saying Rio Tinto is on the list of Congress investing last quarter. That does not surprise me. So that, to me right now, Rio Tinto is a company that I'm probably gonna at least pick up a few amount of them. I think I will. I'm just like, wow. I have a feeling that this is going to be good for this company. All right. Is Rio Tinto a Canadian stock? Well, they're out of Quebec. So I think they are. I'm pretty sure. I feel like I did them in a list maybe 2-3 years ago. But yeah, well, we'll find out. We'll take a look at Rio Tinto here once I'm finished the news, because then I can pull up the side screen and all of that fun stuff. All right. Let's. All right, that was Rio Tinto. All right, here we go. So, oh, the DST. So the U.S. is right now not very happy with Canada's new proposed digital services tax. So basically, the Canadian government, they have approved a new DST tax, which is basically going to charge 3% on foreign tech giants that generate revenue from Canadian users. So most of these companies, of course, these tech giants are all in the States. So they're not happy about it at all. Now, according to, and if you've listened to Freeland talking about it. She says, "Oh well, many of the companies or many of the countries in the world, they're doing this. They have similar tools, and it's all working out fine." So that's kind of her status on this. Now, critics have basically said that we really shouldn't be pushing it out right now. We need to put it on hold, and the reason for that is that there is an organization for economic cooperation and development. They're currently looking at putting in place some kind of a global framework for, a digital sales tax of some sort. So they're like saying, why are you jumping the gun? Why not let them work out the problems and get this all in place? Because if that happens, then it's a no-brainer. They don't even need to do this. So they're causing sort of unnecessary pain that the U.S. and the big tech companies in the U.S. are like, oh, yeah, we don't want to do this. And here's the thing. I mean, you can't keep on, you just can't keep on hammering on them. Like we've already done, like the fact that you can't share any news on Facebook is because of some of these crazy bills that we've been looking at and that we've been pushing on the U.S. So, what can I say? All right. I'm going to just power through the last news article so that we can get rid of the news. All right. Chinese Timmy's. So Restaurant Brands International, or RBI, they have just inked a couple of deals that are worth $45 million to basically bolster their presence in the Chinese market. So they've got two things there. They've got Tim's China and Popeye's China. So Popeye's China, they launched 14 restaurants in Shanghai in the last year, which is pretty cool. And now the first deal that has been inked is right now. Tim's China had control over Popeye's China. So right now, the first deal is to basically take Popeye's China away from Tim's China and make it its own thing. Then after that, they're going to partner with Cartesian Capital to invest a total of $50 million over 3 years in Tim's China. And part of that is they needed to get Popeyes out of there. So they did that. Now, the initial investment will be $30 million. So 30 plus 15, that's where you get that number from. So the whole idea is to ramp up their spending to spur more growth in China. So, and for some reason, it's funny. I can see somebody in China eating Timbits with chopsticks. To me, for some reason, I think that would be cool. I just think that would be cool. So Tim's China can now redouble their focus on quality restaurant development and providing Chinese customers with high quality Tim's coffee and food offerings, otherwise known as Timbits. Probably donuts too, and some maple stuff and all of that fun stuff. So pretty cool. All right, on the calendar for next week, not much in Canada. There's not a lot happening. But in the U.S., we do have on Thursday the 11th, we got the CPI coming out. Then on Friday next week, we get the PPI. So we'll get another snapshot of how inflation is doing in the U.S. On the earnings front, in Canada, pretty slow earnings week. Two kind of notable companies, Aritzia. They have and Aritzia actually didn't do that bad in the quarter. So they're either going to meet expectations or they might just exceed them a little bit. The other one is Cogio Communications. They're also having their earnings call as well. So there we go. This is great. I can now, give me a second here. I can get to the big screen now. We can actually look at stuff if you guys want to. I just need to go bang. All right, there we go. And there we go, up to the full screen. Woohoo! All right, now that the news is done, before we jump in and get caught up here, and holy banana bread, before we even do that, I want to quickly acknowledge Y Videos in with a super sticker, 149. Fantastic. Thank you, Y Videos. And you have secured tomorrow's bonus market close. So we will be back here tomorrow. That's fantastic. Fantastic. All right. Okay. All right. Paul says Rio Tinto now owns the copper mines in Mongolia that TRQ used to own. I remember TRQ. Oh, yeah. Rio Tinto is from Australia, I believe. Okay. I do think, though, that they're listed on the TSX. So they may be sort of like if you look at the Drax Group, they're a British company, but listed on the TSX. I'm pretty sure. But, well, let's find out. Because now I have, I can do this. All right, let's bring it up. Bang. Oh, and I like to be, just give me a second. I like to be a little fly in the corner. All right, there we go. All right, Rio Tinto. Here we go. Let's load this all up here. Yeah. Okay. Oh, maybe it's just the US. Look at this. Okay, so yeah, it looks like New York Stock Exchange. I'm seeing it. I'm not seeing it in Canada. But right now, I still think it. I think when I see revolutionary technology like this, it does make me think, oh, it needs to be my portfolio. So I may have to put this in my US portfolio, but let's just take a look over the last 3 years. So yeah, they've been sideways. That's fine. But I think this new technology has a chance of taking them up a little bit. But let's go into the key data for a second here. I'm just always curious about, well, I'm not actually getting a return on equity or return on assets. So I'm not getting all of the information I'd like to see. I definitely need to go looking a little bit deeper, but they do have a half decent dividend as well. But still, that news story made me excited. It made me excited. And I know I've seen Rio Tinto before, and I was like, no. Oh, well. All right. Watching with a 30-minute delay. Holy banana bread. Owned a lot of Rio over the years. Your live has great gems, but sometimes hard to find. Wonder if there's a free AI to section them automatically. Would you be interested? Thanks for all you do for us. Yeah, absolutely. I mean, I have started putting them in a watch list. So, like the market closes in one and this week in another. So that, I think that's helping. But yeah, I mean, especially, I know if you give the address, I know ChatGPT used to do this. It could at least access the transcript and then go in there and pull information out. But yeah, give it a whirl. Let me know what you find, because I think that would be kind of a cool thing to be able to index things a little bit. I know somewhere's down the road I might start looking. Well, the problem is a lot of times when I go off on any topic in here, it gets too long to really become a short. So I have to sort of think about ways that we can kind of get that going. That would be just a lot of fun. Let's see. O is Aussie. The other company in the article was Brazilian. I can't remember the company name anymore. Let's see. Chopsticks for Timbit. Strong possibility because my Hong Kong friends use it for chips. Keeps fingers clean. Yeah. Yeah, absolutely. Like, what would be good? Like cheesies would also be good with chopsticks because those things get your fingers really, really, really dirty for sure. Hello, Friggin. Welcome to the show. Watching on a new PC I built. Very cool. Very cool. I used to, back before I went into a Windows ecosystem, I used to build all of my own computers myself as well. So that was it was always fun. Like, especially you build yourself a new one, and you put, if you're building it yourself, you're putting in some really good components. Yeah, it can be a lot of fun. It can be a lot of fun. Let's see, got from 396 to 397 subscribers during this stream. Really? Well, let's see. I was at 3668 when we started. Where are we at right now? Oh, look at that. 3972. Yeah, so we're now 28 away. 28 away from that open to close stream. Holy cow. That's fantastic. Always love that. Always love that. Oh, okay. This is wonderful. So, all right, Rio Tinto is Alcan. Let's take a look at Alcan. Aluminum. So that would be aluminum. ALCAN. All right. Well, I'll have to figure that out. I don't know why. Sometimes. All right. If you happen to know the ticker for Alcan, well, let's try this here. Google. Alcan ticker. Let's see here. AG. Or no, ALC. Let's take a look. Well, we'll take a look. Let's go back here. ALC. Algoma. That's Alcon. Okay. Yeah, I'll have to figure it out. There was that other letter there too, AG, whatever reason that was. Now that's, well, if you're looking for silver, we were talking about that earlier. There's the first, let's just look at it. Sometimes you can have, in the words of Bob Ross, a happy accident. First Majestic Silver Corporation. Let's see what they've done over the last year. Okay, so well, yeah, they've definitely had a bit of a peak here with silver. That's not too shabby, not too shabby at all. Quarterly small dividend, but this is gonna be a growth stock anyway. Let's take a look in their key data in here. This I don't like. So right now they're currently unprofitable, negative 3.60%. So maybe not a happy accident. Oh well, it would have been cool if it was, right? All right, let's see here. A Vancouver guy wants to know what the specs are on the new PC that the friggin has made. 490 GPU. Thanks for the win. Thanks everyone. Here we go. So an RTX 4070 Super running on an X3D AMD B650 plus motherboard with the brain of AMD Ryzen. There we go. Let's see. Put Rio up for a vote for a deep dive. Maybe you sound like you are interested in it. Oh, I'm interested in it, but you know what? Honestly, it's interesting. Sometimes I will put a company up in that deep dive, and I'm thinking it's gonna win. I'm thinking, oh yeah, everybody will want this one, but not always. Not always. That's for sure. All right, I got to drop another membership. I'm gonna come back to Big Head, because otherwise you guys will get into that whole, whoops, why am I still down in the bottom? Let's try that. There we go. That was weird. It put me at the bottom. All right, let's drop another free membership. Let's do that. All right. I think I feel like I'm falling behind on the memberships today. It's just one of these days, but that's fine. That's fine. I don't mind a busy day. All right, let's come in. We'll see who wins. I don't know. All right. Bye-bye. There we go. And the winner of a free membership is, here we go. It is Jonathan. Jonathan, am I late? Jonathan has won a membership. Awesome, awesome, awesome. Love it. All right. Let's see here. Just reminding, as per your request, appreciate review. ICIN. Oh, ICLN. Thank you. Thank you. Let me pull it back up again here. Banana bread. Why does it? All right, we'll leave it like that. We'll leave it like that. I won't block the bottom. I'm going to accept that for some reason. It's doing its own thing this time. All right, so what we were looking at, ICLN. All right. Okay, so this is the iShares S&P Global Clean Energy Index. Okay, fair enough. Let's take a look. iShares is another pretty good ETF group. All right, we'll do the 1 year for now. Okay, so they have been around for a while. Let's go to the 5 years. Oh, they've been around for a long time. So they had this big peak. They've been down, a lot of downward momentum. So they certainly have been running into a little bit of an issue here. Semi-annual dividend, small yield. Okay. Let's go into their key data. Right now, I'm not super excited yet. Let's see here. All right, I'm not getting any kind of return on assets. That's fine. Well, it is an ETF. Sometimes you don't get that with ETFs. That's fine. I'll tell you, this is one I'm not super excited for it. There's nothing in the news. Okay. I'm just not super excited. Like, we have had some movement here. So, from 13, 19. So there's been a little bit of movement, but when you're just looking at the overall trend, yes, you did have this little bit of movement here, and that's not bad, going from 13. So that's a little bit of a total return, but I think there's probably better ones out there right now. I think it'll probably still like eventually will it get back up to here? I honestly don't know. Um, it really comes down to that pulse on what happens with especially when you're dealing with some of the clean energy. It is a trend. It is a future trend. This would be something like if you're looking at it long term, you're probably going to be okay. But I wouldn't look at it for a quick recovery. I think it's going to be a slow one. All right. Let's see here. All right. Oh, see, I meant Alcan, a Canadian company, was bought out by Rio Tinto. Oh, okay. Fair enough. Fair enough. That makes sense. Let's see here. I'm just skipping all the computer talk. All right. Ian says, after you gave me the idea of signing into Simply Wall Street with a different account, I signed into YouTube with a different account and subscribed to you again. Oh, thanks, Ian. There you go. Now you can watch me on 2 separate computers and have me in stereo. So, no, I don't know. It's a silly joke, but I like it. I like it. You are a world uranium ETF. I do, and I'm pretty bullish on uranium long term. That's for sure. Okay. Let's see. Go Shorty. It's my birthday. There we go. Let's see. During the Vancouver Blossom Tour, for sure, I'll be promoting our banana bread company community. Let's get your subscription up. Excited for your live trading show. Yeah, absolutely. Absolutely. Yeah, and there's going to be a lot of great people over there. Like you, if you're going to that show, you'll get to meet Justin. Whoa, Brandon Beavis, Canadian in a T-shirt's going to be there as well. So those are 2 big names that will definitely be there. And if you have a chance to meet them, don't beat them. Please don't beat them. But if you have a chance to meet them, you can drop my name if you want. They both know me pretty well. Always a fun thing. All right. Let's see here. Last PC. Yeah. Last PC I built was a GPU mining rig for crypto back in 2013. Holy banana bread. All right. Yeah. All right. All right. There's so much talk about Ken's computer. All right. What does BB company trade under? Well, it doesn't. It's not a real company. It's see, in this, here's a funny thing. Oh gosh, I just saw Nine's next comment, but we'll look at that in a second. A lot of times when I make an example, I will use a fictional banana bread company or a banana bread co. And I think that's where whoever created the banana bread company, they've been sort of playing off of that. So it's always fun. It's kind of cool. Yeah, I like it. I like it. It's not too shabby. Not too shabby at all. And Nine is saying, beat banana bread in a T-shirt. Oh, there we go. There we go. All right. Let's get another membership going because we're getting closer to the end and want to drop these before we run out of time. All right. Just give me a second. Here we go. Bang, bang. All right. What I'm going to do is I got about 5 left to drop. I'm just going to drop them all at once. So we'll do that. We'll see who wins. This is going to be fantastic. As I'm doing that, get your last minute questions in because we've been at this now for 2 hours and 38 seconds. I'm not going to turn this one into the that 4,001.
2.5 hours.
I think Jill's hungry. Hungry.
A little.
So, it's just like, get off the computer. I want to eat. All of that fun stuff. All right, let's do this. Here we go. And all right, bang, boom, it's coming. Let's see what we got. This is going to be great. This is what I call like a blitzkrieg. All right, here we go. And Amvas, 9, Chad, Friggin, and Kendall G. All 5 of you. Look at that. Bang. That's always cool. Jill wants me to do one more. Jill's like, do one more. Okay, we'll do one more. We will do one more. Let's do one more. All right, it's coming. All right, who is going to get... This one here, technically, this one's from Jill. Because I was done. So, Stan Gray. Jill has gifted a membership to Stan Gray. So congratulations, everyone. As Muggsy's saying, congratulations, everybody. You guys all rock. This is fantastic. All right. So we are going to be back here tomorrow. We're going to do a market close. It should be fun. Let's see what the markets have in store for us. And holy banana bread, we are getting so close to those 4,000. I can already feel the strain in my throat after the 8-hour stream. It's going to be fantastic. Yeah. So it's not much time until we get there. You guys are absolutely awesome. Those of you who are interested in the split core stocks, that's coming out on Tuesday. Now, I will mention channel members get to see it one day early. So tomorrow afternoon, the channel members will actually get to watch that video ahead of everybody else. That's one of the benefits. I also want to mention we do have a channel member live stream coming up. Is it this week? I think it's next week. So not this week, but next week. So I'll be asking about some topics from you guys for that as well, because that's always a lot of fun. So until then, everybody, I better feed Jill. I mean, she'll feed me. Yeah, or she'll feed herself. Anyway, I should probably call it for now, but it has been a fantastic. What time on Monday? The market closes always start 15 minutes before the market closes. So 3:45 Eastern. Then you can work that out depending on which time zone you're in. But we'll be here. I have the bell. I have the bell for tomorrow. That will not ring until tomorrow. Well, if the cat comes running across my desk and knocks it over, it might ring. But other than that, it shouldn't ring until tomorrow. Until then, everybody, take care. This has been a fantastic stream. You guys absolutely rock. I can't wait till tomorrow. Bye, everybody.